All right. Yo, I hope everyone's having a great Christmas or holiday week. Let me go ahead and start this off with a quick portfolio update. We're going to be looking and analyzing a lot of your guys' stocks live. No micro caps. We're mainly just going to be looking at some of the bigger names and just if we find any interesting names, we'll put them on our watch list. So, yeah, let me give you a quick portfolio update. This Monday's actually doing pretty good. Hey, we're up 0.68%. Not too shabby on the day. We're at like a new intraday high as we speak. So I hope your portfolio is doing great as well. Here is my total percent change on every stock. Ooh, maybe we Santa Claus rally can come through and maybe Carlisle will go green. So I can say that every single one of my stocks is lifetime green. But yeah, check out the S&P 500. It's up 0.61%. QQQ is up 0.5%. Not too shabby. We also have a Roth IRA. Our Roth IRA is not doing the best so far this year. But one really cool thing is our Cavco stock hit an all-time high today. Pretty good. We're only see. Look at this. If we look at them the past year, they're up 36%. Past 5 years, they're up 235. We're only up 4.3%. I bought them at an all-time high just not too long ago, and I didn't mind buying them at an all-time high because I thought they were such a quality name. We're trying to bring the growth back to our Roth because we've definitely underperformed. We're only up 2% the past year because we basically only had this for a year. So we're only up 2.66% all time. So we're definitely slugging the S&P 500. But yeah, Weeble's actually doing pretty decent. They got added into the Russell 2000 index. And speaking of Weeble, let me go over to my Weeble portfolio. This is kind of like my risk on account right here. We're only up 18.99% all time in here. And let's see what's moving today. Looks like UiPath is doing a bit of a recovery. I took a lot of profit on this stock there. Well, still sold it for a loss, but at $19.27. Yeah, it's at 16 bucks. I remember when it rallied up here, I was like, this price is looking pretty overvalued. So I did trim some of my position up there. But yeah, Futu's a great one. I've been buying the dip on. We bought them like literally just days ago, like at 162, 171. So yeah, let's see what's down on the day. So yeah, Molson, Sprouts Farmers Market, and yeah, the food names, all three of my food names are down. So makes sense in this environment. Looks like tech's mainly doing good. Yeah, here are all the stocks that we own in here. Hey, what up, Plasma, Gent, JVM? Good to see y'all. Hope y'all are having a great week, great holiday week. And here's my Moomoo portfolio. This is kind of like my buy, never sell account where once we buy a stock in here, I never sell it. And these are all the stocks that I've chosen in here. I got Amazon, actually a lot of these other names are all in the S&P 500. Like if I go over here, actually every stock in here pays a dividend. I kind of forgot to say that. These are all dividend paying names. So every stock in here pays a dividend. They're all in the S&P 500. Same with this portfolio. Every stock in here pays a dividend except for Amazon. Amazon's the only one. And I don't mind that they don't pay a dividend because they make up for it in stock price appreciation and reinvesting into the own company. So yeah, we're up 1.3% on the day. Let's see. Plasma said I'm buying more MU at close today. Yo, check this out. Here's the cool thing about Micron. Like y'all aren't going to believe this in terms of valuation. This is why Micron actually doesn't look too shabby, even though they're at an all-time high. So we kind of look at them on the chart. New all-time high today. But check this out. The forward PE in the very middle of my screen here is a 7.1. The current PE is a 25. The PE ratio is basically price to net income, basically price to EPS, and EPS is just net income. And check out what they're expected to do next quarter. It's already, this quarter was 460, a huge beat. It's supposed to be 825. That's what they guided. And then the quarter after, 936. The EPS growth, I'm telling y'all, it's insane the RAM demand that they have right now. So Micron is a super interesting, like cheaply valued tech semi play. So that's that Micron. They're interesting to pay a dividend to. All right. Hello, what's your take on DXCM? Let's check out Dexcom. I actually forgot about this name. Let's check him out. And Swan said, check Roblox. Hey, let's check out Roblox. Sadly, I don't love Roblox because they're not profitable, but there are some things I really like about them. So Dexcom, they're profitable. So they have a forward PE of a 28. But they've had a rough year. Check out that stock price. Let's go see if we can figure out what happened here and what did they do. So 71% of the revenue comes from the US. This quarter, they've been beating on expectations. They beat on revenue, massive beat on EPS this quarter. So yeah, they're actually printing money over 100 to 200 mil of net income a quarter, which is great. What about top line growth? The top line growth is there too. Sales are up 21. Ooh, maybe it was struggling back here because the sales were only up like 1.7, but it looks like the growth came back. Cash from operations looks phenomenal. So Dexcom, interesting name here. Yeah, the free cash flow is just as good as the net income. So it's just a profitable company, 28 PE, 4 PE. That seems fair. Yeah, that's interesting there. Is this like a payment company? Medical device company. Oh, I'm completely wrong there. Dexcom Medical. Here's their website here. I guess we can give a quick glance at this. Relentless innovation in glucose health. So okay, so like these little patches. Okay, interesting there. There's Dexcom at a 28 forward PE. Yeah, they're the same price as they were back in 2020, so they've been flat for 5 years. So maybe, probably at this valuation is probably like fairly valued. Yeah, hey, what up, Brian Paul is up 0.6%. Heck yeah, Suzuki man, good to see y'all. Let me actually check out Roblox. You know who actually owns Roblox? Actually, let me show you who owns Roblox. Kathy Wood does. If we go to she actually lost a lot of respect because her portfolio ain't doing too hot versus the S&P 500. Actually, it's not in her top 10 holdings anymore. I kid you not. Just a few months ago, Roblox was her second or third largest holding, and now it's not even in her top 10. So I don't know if she sold out of some or it's just gone down so much in stock price, but here's the why I still wouldn't buy Roblox even on the dip. Technical wise, it may look like a screaming buy or something, but if you're looking for a stock to diamond hand for the long run, I wouldn't quite buy Roblox yet at a 57 bill valuation. Let's go. Here's the good news. There's some great data here that's super impressive. So if we go to this right here, this is a super important metric. Their daily active users, literally quarter over quarter, their daily active users went from 111 million to 151 million, just quarter over quarter. And year over year, it was 88.9 million. So I don't know if it's propped up on AI bots or something, but it really seems the daily active users are growing like crazy, 35% just quarter over quarter. But here's the bad news. When we go to their bottom line, they're burning a lot of money, a couple hundred mil a quarter, 250, 250. So that's, like $1 billion a year plus their leverage. They're in a rough spot because they're losing so much money because of their stock-based comp. Like when you go to the free cash flow, it looks like they're doing great because they're making all this free cash flow, but it's all of it and even more of the free cash flow, like 300 mil on top of this, gets eaten up by their stock-based comp, and that's included in GAAP net income. That's why their net income is super negative every quarter. Very sad. So that's why I'd avoid Roblox. It doesn't look like they're nowhere near profitability, and it looks like their losses are slightly worsening. So I just be careful. I don't love companies that burn a lot of money. Dang, they're the same price as they were when they IPO'd. So yeah, that was a big metaverse hyped up name. But I want to see them get profitable. I love the daily active users growth. Hopefully that was somewhat helpful there. It's like a dilemma. You gonna do a stream tomorrow? Hey, maybe. Yo, I saw Uber today. Uber did go crazy. Evil Elon said mRNA. This is a kind of vaccine play. I don't. Actually, I would not buy this one. Well, they're developing. They're divesting away. So here's the thing. If we go to the right now numbers, they look terrible, but the future sentiment is somewhat okay. So if we go to their net income is terrible. Check out the losses. Like every quarter they're burning through sometimes $1 billion a quarter. They lost 1 billion, 900 mil, 800 mil, 200 mil. But when we go to the revenue, sorry, my Wi-Fi loves to be slow, so I guess it doesn't want to load this here. Revenue, oh yeah, look at the revenue year-over-year declines. This is just not what you want to see. Revenue's down 45% year-over-year. Last quarter was down 41% year-over-year, down 35, down 65, So these year-over-year decline, and that, oh my goodness, that's after falling 30 and 90 and 44. So obviously they had a ton of revenue when, COVID vax, but now that was their main product. But luckily they have a good balance sheet and they're trying to invest in these other names. Let me actually find out what they were. So yeah. So COVID vaccines accounted for 95% of revenue, which is not good. But here's the number 3 line: pipeline progress in advancing phase 3 trials of personalized research and seasonal flu vaccines while discontinuing CMV vaccine deployment. Well, I don't know. It's just not one that really interests me too much. No forward PE, just sales are on the massive decline, losing a lot of net income. It's just a tough one. I'd actually rather own Pfizer, and I do actually own a slight bit of Pfizer. And we're down on them. Yeah, we're down 7.8% on them. This isn't a stock wait, that's Progressive. Where's Pfizer? Oh no, we're up on Pfizer. No way. Okay, we're up 0.48% on Pfizer. Not really a stock I'd recommend, but if you're looking for another kind of healthcare name with a high yield, I definitely pick this one over with the forward PE, a 12 forward PE, so they're profitable. They have a 6.8% dividend yield. If the vaccine, whatever, if that does come back, Pfizer would also benefit just like mRNA. So anyway, hopefully that was somewhat helpful there. But hey, again, nothing. This is a financial advice you want to follow. I appreciate that. I sell nothing. I have no course book, nothing like that. We're just on here giving my opinion. So let's check this one out right here. What up, Suzuki man? He said Motorola. Actually, this is a niche name. You wouldn't, when you hear Motorola, you think of those old phones, but you wouldn't believe how great their stock have done because they're getting into government communication. A lot of police stations are using their walkie-talkies and stuff like that in their software. So look at Motorola. So, like this has actually been a pretty good performer. I mean, this is pretty good. And what's the forward PE? A 28. That's not too bad. You can pick up Motorola at a 28 forward PE. Let's go see what exactly they're up to. Actually, oh, there's no kind of AI overview. Well, let me scroll down here. Yeah, I guess no AI coverage. Well, that's okay. Yeah, forward PE is a 28. So here's what they do: products and systems integrated. So they're not really in smartphones. Uh, so that's up 6% year over year. And software and services, that's up 10% year over year. This is great growth. That's double digit growth there. And if we go to their bottom line, this is kind of the great part. I didn't know this, but they're easily making 4 to 600 million of, after tax net income. The before tax number was 766. The after tax was 560. So this is great bottom line for them. And that's why they have a 1% dividend. They're doing share buybacks. So Motorola is cool. What is this app? Hey, this is actually a brokerage. If you want to get stocks, this is my favorite app to get stocks on. That's actually in the link tree in my bio, very first link there. It's called Moomoo. If you want to use my affiliate link, if you go and deposit $100, we'll both get some free stocks. But yeah, if you want to get this brokerage, link tree in bio, first link there. Actually, all these apps are. Robinhood's the second link up there. This is another brokerage I like. Um, let's see. Can you check gold and give your inputs on Walmart? You know what? Let's just go to Walmart. Yeah, gold. Actually, yeah. The way to check gold is ticker symbol IAU or GLD. It's literally the commodity of gold in an ETF. And gold, as of today, as of right now, is at an all-time high. So if you got any gold chains, gold jewelry, maybe go hit up the pawn shop and sell it for some cash shola and buy stock. Or I don't know. Or actually just keep it because maybe the price of gold will continue to climb higher, but the risk to reward to maybe trim a little bit of it. Like literally since 2022, gold has doubled. It's because the Fed's printing money, there's currency inflation fears, and it's just, and for other maybe political reasons, like BRICS back in their currency with it, whatever. Precious metals in demand from semis or anyway. Gold, also silver's done decent. I like gold the most. Did you buy more Amphenol? I did, not much, but I bought one more share of them. Yeah, this is one of my favorite picks that even though I don't mind kind of buying them at all-time highs and, the valuation's fair. I bought them it's a 32 forward PE. I mean, it's certainly tough if I never previously owned it, my cost basis wasn't way down here, I wouldn't be loading the boat at these prices, but I'm trying to DCA up, continue buying quantity more shares at a valuation that I think is fair. Hey, no way. Happy birthday. Your stream's tomorrow? Or wait, hoping for a birthday stream tomorrow. No way, dude. Happy early birthday. We'll try and stream tomorrow. That's what's up. So let's check out Walmart. You guys wouldn't believe this has been, boring Walmart. It's always the boring stocks that do good. Hey, Bertello, what do you say here? Please do SAB when you can. Hey, what's the ticker symbol for that? We'll check it out. And we'll look at AbbVie. Hey, what up, Nick? We'll check out all these right here. 6-star. We'll do Zeta 2. Coinbase, we'll get all these names. Yes, sir. So here's Walmart right here. Boring grocery store Walmart is moving like NVIDIA. So one of the reasons I think they've been going up is because ChatGPT included Walmart. If you search something up on ChatGPT that's like grocery related, it'll link Walmart products where you can buy it or whatever. Let's see. Walmart shareholders approved stock incentive program. FDA warns Walmart over sale of recalled infant formula. Okay. Well, that's whatever. Walmart is expensive. It's super expensive, actually. A 39 forward PE. That's more expensive than all the Mag 7X Tesla. So, but they certainly are quality. They've copied Costco's successful business model with Sam's Club, where you got to pay for a subscription to even get into the store. And whether you go to the store or not, they're collecting that subscription money. But look at the bottom line. Here is Walmart's after-tax net income at the bottom here. They print money, 6, 7 bill in net income a quarter, and grocery stores are seen as kind of recession resilient. Even in a recession, people will still go buy groceries at Walmart. And Walmart, they're innovating into the online presence. They're not going to let Amazon eat their lunch because, yeah, anything you can get on Walmart, you can get on Amazon, but it's like the two top dogs now. All the other grocery stores are kind of left behind, like even like Sprouts Farmers Market, and even Costco doesn't even have that big of an online presence. That's what gives Walmart a better advantage, actually, over Costco. So look at this right here. The bottom line is just phenomenal. You get a dividend. You just happy to own this one. It's probably a tough risk to reward buying, at all-time highs right now. But yeah, great company. I wish I owned them. Another one that's great. Let me get to AbbVie real quick because this is a stock. If you're looking for a high yielder that that gives you a 3% yield, but also still appreciates in stock price like 3 to 4% a year, this one might be for you. It's like a mid-tier yielder. I think I consider this a pretty high yield, especially at how they raise it. But oops. You get a 2.9% dividend. So you get a great little dividend yield there. And I think the valuation's super fair. Well, 24 forward PE on AbbVie. Check out the growth. So they sell a bunch of different prescriptions like Skyrizi. This has been their monster grower. Check this out. Skyrizi, this growth right here is why I think the 24 PE is certainly justified and why this stock will continue to see 3 to 4% stock price appreciation and you get 3% dividends. So on average, you should literally, even if you buy the stock right now, get 7 to 8% returns on average for the rest of the time. But in a perfect world. But anyway, Skyrizi has been super growthy. That's up 46% after grew 50, after grew 50, after grew 80. Like it just hits a new record every year, every quarter. And not just Skyrizi as well. They have a bunch of other prescriptions. Like this is their second biggest one, Rinvoq or however that's pronounced. Check out the growth here. It's up 35 after 45 after 59. So they're just continuing the streak, also at a new record. So this is one that I like. Safe dividend with growth, healthcare name. I like it. So let's look at, I'm so behind here now. Coinbase. You know what? Yeah, let's do Coinbase. This one's interesting. Another Cathie Wood stock. You know what? I'll actually pull that up for you. If we want to go to Cathie Wood's portfolio, let's see how big of a position it is for her. And then also one thing I like about Coinbase is they're getting into the prediction market stuff. Okay, yeah, here's her portfolio. Coinbase is her fifth largest holding. It's 4% of her portfolio. And it's kind of a Bitcoin proxy. Here's Coinbase versus Bitcoin. As you can see, Bitcoin's kind of done better in the long run, but they always like rhyme together. You know what I mean? Like especially recently. Someone just rang my doorbell. Hopefully someone will get that. Okay, Coinbase, well, I want to pull up the prediction market stuff. So Coinbase, they're getting into stock trading and prediction market stuff. So ARK increases stake in Coinbase. Coinbase launches, you know what, I can't find the news, but just know they're getting into stock trading and prediction market. And this prediction market stuff is going to make them a lot of money, I feel. But here's another cool metric we get here. The monthly active users are 9.3 million. If we go to the exact same time last year, it was 7.8 million. It's actually not just monthly active users. It's actually monthly transacting users. So even, harder metric to get. So I love that. 9.3 million monthly active users. What's the forward PE on Coinbase? Okay, that's not cheap. It's a 39 forward PE. So, but it usually just trades with Bitcoin. So it's kind of a Bitcoin proxy, and I love that they're getting into the prediction market stuff because it's making Robinhood a boatload of money, and they're trying to copy Robinhood's successful business model. Everyone wants to be what Robinhood is now because of how much they make. All right. 6-star, what up? He said Zeta, let's do it. What do you think about... Oh, hey, what up, Eric and Cap? He says, I have a quick question. Yo, what's up, Cap? What's the question there? She still got Roblox? I think so. Ticker is SAAB. Oh, hey, we'll try and find that one there. We'll look at that one too. Yeah, Cathie Wood's the one who who the Roblox. Yeah. So here's Zeta Global. This is an interesting software name that, I wish I knew what they do. They're like an enterprise software. I don't know specifically, but here's a cool couple of things that I like. It looks like number one point here, customer base expanded 20% to 572. So 572 customers with 180 super scaled clients generating higher average revenue, boosting top line. Announced acquisition of Marigold's enterprise software business to strengthen products. So that'll even bring more growth. Whether, this business is already organically growing very nicely, up 25 after 42% growth after 25% growth. So they're on a streak of top line growth. And with this acquisition, that should bring even more. What about the free cash flow here? Yeah, look at the free cash flow. This is phenomenal growth. It's up 84%. They're super close to bottom line profitability. They're barely losing anything. Look at these year-over-year narrowance of losses. I mean, like these positive, this is phenomenal. They only lost 3 million, 12 million. So what they probably have a forward PE then. Let's see. Yeah, forward PE of 328. It looks so high because they just are getting net income positive, but looks like an interesting software name. I don't know what their EPS will be. And you really got to go do a 2-3 year out multiple. Looks like analysts are expecting them to lose EPS for the next 2 quarters. So it might still be a little expensive at this. So it's an interesting software name. I like the growth. We really want to see them get profitable. What broker is this? Yeah, if you want to get this brokerage, this is my favorite one. It's in the link tree in my bio, very first link there. It's actually an affiliate link. So if you're going like deposit $100, we'll both get like some free stocks. But yeah, my favorite brokerage. It's free, costs nothing, no fees or anything. Oh, you can follow me on here if you want. But yeah, broker called Moomoo. Let's see here. Do you need a video editor? No. I bought Badger Meter in Motorola. Yeah, hey, that's a cool one there, Suzuki man. Maybe we'll do Badger Meter too. Adobe is cheap as heck. Please check. What up? Let's do Adobe then. Sure. Adobe stock. This is kind of like your. Well, actually, this stock has really been hurting from the AI thesis. This is another software name. I'm on Adobe products nearly every day. I'm on Photoshop, After Effects for my YouTube stuff. Hey, if you want to support me, the only way to support me, because I literally sell nothing. I have no course book. I don't coach, literally nothing. Only way to support me if you wanted to is subscribe to my YouTube channel. It's called Nathan Roberts. It's also in the link tree in my bio, and I'm streaming on there. But yeah, anyway, here's Adobe. They're trading at a 20 forward PE. You're right. They really are cheap for a quality software name. This one's really been hurt by the AI thesis because, in 10 years from now, with how AI is growing, will we need Adobe? Because you can already generate these incredible logos in Gemini and stuff. But I always believe humans are always going to need that final touch on art. Like you generate it in AI, but then you still need to kink it out. So anyway, that's my experience. But that's why this multiple has just come down so much, a forward PE of a 20, but their numbers are still great. That's why I am interested in this name. Check this out. If we look at their expectations, they're beating on every expectation every quarter. They beat on revenue, they beat on net income by a good chunk, and on EBIT. So they're beating on every metric. They're printing, this is after tax net income, 1.86 billion in net income. The before tax was 2.26. So they're printing money every quarter. So what's Adobe doing with 1.8 billion of after-tax net income since they don't pay a dividend? They're doing massive share buybacks. It's insane. If you look at the top here, they're literally doing 2 to 3 billion of buybacks every quarter for the past year, and they did that the same year before too. 2 to 3 billion of buybacks every quarter. The free cash flow covers that too. They did 3.13 billion of free cash flow, so not just operating cash flow. So here's what that buybacks do. If we go to the bottom line, the net income grew 10.2. So the net income grew 10.2, but the net income per share grew by 17.5 because the share part of the ratio went down. Again, the EPS growth rate and the net income growth rate should always literally be the exact same. Since the share part of the ratio went down by 7% because the buybacks, the EPS grows more, the PE ratio goes down, gives you more ownership in the company. So it kind of just, rip Adobe Flash. Hey, Adobe, you don't want to know what's crazy? Adobe's the one who invented the .pdf, and they open sourced it and made it free for everyone. So if you like the .pdf, that's literally, it was made by Adobe and they made it free for everyone. Okay, let's see here. What up, Vicky said Navitas. Let's check that one out. NVTS right here. Actually, I don't love this one. Actually, I don't like this one. Sadly, I wouldn't recommend this one. This is a momentum play. This is a fun, maybe swing trade stock, but it has no fundamentals and financials. If we go to their revenue right here, the revenue is 10 million, and look at these year-over-year declines. Revenue's down 50% year-over-year to 10 million. They're burning through 20 to 50 million net income a quarter. It's just not the best situation to see. And if we go to the analyst expectations here, this was already a bad quarter, 10 million. Well, it's expected to fall even more to 6 million, 7 million. So what's the market cap? It's tough. A $1.85 billion company burning through over 100 mil a year with sales on a rapid decline. From a pure financials point of view, certainly not a buy, but there is the reason it gapped up here, they were going literally bankrupt, but Nvidia like gave them some money. I guess Nvidia has been giving money to a lot of people, but actually look at this balance sheet. So yeah, if we go right here to their cash, they have 150 mil of cash. They got another year of cash left. Because if we look at it, like here's kind of what they do. If you look at the cash on the top left, it kind of goes down every quarter because they lose net income, but they got their money and another year. So anyway, not one from a fundamental I like, sadly. I just try to be honest with, I always try and be honest. Hey, try not to spam in chat there. Hold up here. Yeah, we'll try and get to all the stocks here, but yeah, don't spam it over. Let's see. What about Sega and Valve? Is that like a publicly traded company? Sega Sammy Holdings, is that it? Or is that a Japanese company? I know Nintendo's publicly traded. We could look at Nintendo stock. That's the only way to get exposure to Pokemon, by the way. Nintendo owns 10% of the whole Pokemon parent company franchise and stuff. Ooh, T-Mobile. You know what? Let's do T-Mobile. Ooh, and I'm missing so many stocks here. We got to get to Oracle. You know what? Oracle after this one. What is this? Oh yeah, if you want to get this app I'm on, it's in the link tree in my bio. Very first link there. It's actually a brokerage, where you buy stocks. They ask for a bunch of information. But yeah, link tree in my bio. Very first link there. Broker called Moomoo. Here's T-Mobile though. This is the only telecom name I buy. I would not buy AT&T. I would not buy Verizon, but I would buy T-Mobile on this dip as a small position. Their forward PE is cheap, an 18 forward PE, and they return. They're not super indebted like all the other ones. They have a sustainable. Here's the cash from operations. This includes all the interest they're paying on their debt. They're printing money. And this doesn't include non-cash expenses like stock-based comp and everything. So that's why you always got to look at the net income too. So here's the bottom line net income right here. And this was a one-time adjustment they had. So actually the core operating profit. But anyway, here's the bottom line. They're easily making over $3 billion in net income if you kind of average it out here. They're making $3 billion of after-tax net income every quarter. And what is T-Mobile doing with all that money? I love the Mint Mobile ads. Ryan Reynolds is so funny. But they pay a dividend. And look at the dividend. It only costs $987 million a quarter. Safe payout ratio. And if we look, it used to cost over $1 billion. How did the cost of the dividend go down? They didn't cut their dividend. They bought back their own shares. And when you buy back your own shares, you don't have to pay dividends to those. And look at this. They're doing billions of share buybacks a quarter. They did $5 billion, 2.5, 2.5, 2.5. I mean, they're returning money to the shareholders. So not only do you get a 1.8% dividend, a very great dividend, you've gotten let's see, this again, one-time adjustment, EPS. So net income fell by 11. But the EPS, net income per share, only fell by 7 because of the share buyback. So they bought back 5% of the company on top of paying a 1.8% dividend. So very shareholder-friendly company I like. And that's why if you look at the performance of, T-Mobile versus any other of the ones like AT&T or Verizon, they've just crushed it. Let me get to Oracle right here. Oracle, thoughts on Fiserv? Yeah, that one's pretty trash, but we'll check out Fiserv too. Probably fairly valued even after their massive dip. Their transactions year over year, they're missing on everything, but we'll check out Fiserv too. So here's Oracle. Let's see. TikTok signs agreement for U.S. venture. Yeah, actually, Oracle is only buying around 15% of TikTok. So check that out, actually. And there's still a lot of, stuff over this, like TikTok's really not selling them the algorithm, but Oracle will hold a 15% stake and store the US's data in the cloud infrastructure. So yeah, all the data will be stored in the US now on Oracle servers. So check this out right here. If we go to the earnings hub, let's see if we got any results here. So yeah, cloud infrastructure revenue surged 68%, outperforming cloud applications growth of 11%. Net profit margin rose to 38%, aided by a one-time $2.7 billion gain from selling Oracle's stake in Ampere, boosting profitability. So yeah, they did have a one-time adjustment to their EPS. This remaining performance obligations, that's basically money they're owed, is $523 billion, signaling strong. It's basically their backlog, signaling strong future revenue visibility. $300 billion, literally $300 billion of this $500 billion is OpenAI. Huge OpenAI deal, and OpenAI, since they're not able to fulfill it so quickly, OpenAI is now moving money to AWS. So, but check this out. This is one-time adjustment, you kind of look at the other quarters. They're making like we'll be generous, over three and a half, we'll say 3.5 bill in net income a quarter. One thing being questioned is all the debt that they have. They have a massive amount of debt, and they have to spend like another, they said they have to get another $60 billion of debt to achieve what they need to which is just like insane. Because if we go to their long-term debt right now, the nasty stuff you don't really want at the very top right, they have $99 billion. Hey, watch out for that guy in chat there. Hold on. Okay, there we go. Yeah, well, watch out for people impersonating me. There's people, watch out. I'll never follow you or DM you. There's some guy in here. I just watch out for them. Don't answer your DMs. That's not me. Okay. Anyway, 99 billion of long-term debt plus their current debt of another 9 billion. Basically, they're really in debt. It's a mixed bag because they're cheap. What's the valuation on them? Forward PE of a 36 forward PE. That is expensive, but they do have a big backlog. They're like the fourth or fifth biggest cloud play. AWS is number one, then Azure Cloud, then Google Cloud, and then it's Oracle. So, and they're more expensive than all the other ones. Like Amazon's at a 30 forward PE, but Oracle's interesting here. Certainly, I will say. So here's the thing about Fiserv. They had to change their ticker symbols. So check that out right here. So this company right here, every time they report earnings, it's like a massive gap down. It's so sad. They do like over 40,000 transactions a day, but that number missed like crazy. So if we go right here to the numbers, here's what the analysts were expecting this quarter. This is the unfortunate part. The analysts were expecting 5.35 billion. They reported 4.9, so a massive miss on revenue, and not just on revenue, but net income too. They expected 209 of EPS, massive miss on EPS, and not that wasn't some one-time adjustment either. The earnings before interest and taxes, no adjustments at all, that massively missed as well. So that's why I think when we look at the forward PE, look at that. So the current PE is a 10. But the forward PE is at 12, so their net income is expected to fall another 20%. The forward PE of 12 might be fairly valued at this price. This is the kind of company that probably deserves a 12 forward PE. So that's what's interesting here. Fiserv. Let's see. Yeah, merchant revenue financials, handle a lot of transactions, US and Canada. So anyway, interesting there. Yeah, the profits fell 16% year over year. And the revenue grew, so their margins really compressed that quarter. Anyway, interesting one, and not the worst valuation. Do you think it's a good idea to start a position in Webull at the top of a bull market? Hey, I don't actually. Yeah, as a super small position, I do own Webull. This is not the kind of stock. It's expensive. It's expensive at this price, but I'm more bullish on them than the analysts are, and I think it's worth a super small if you do choose to buy Webull, don't make this at all a meaningful size position in your portfolio. I'm probably more bullish on Webull than anyone in here, and I have the smallest position. I'm down. I have $400 in the name. I'm down 1.5%. So you can get in at a slightly better cost basis than me if you buy right now, but I wouldn't make it a meaningful size position. Webull is just this platform, this app right here. I've used their app for many, many years. We've done terrible. Well, versus the S&P 500, we're only up 19% all time. And the 4 years I've owned the account, so that's gotten 4 or 5% a year. But I noticed they added right when they IPO'd, they brought crypto and prediction markets to the app and advisors, and they have this thing where you can pay them a subscription, which I don't pay for, but they're literally copying Robinhood's successful business model. I'm also a shareholder of Robinhood. I'm also a shareholder of SoFi and Moomoo, which is Futu. I love the whole fintech industry. It's the picks and shovels play of this whole Robinhood, Webull. They're taking over DraftKings market caps with the prediction market. So that is why I'm more bullish on Webull than the analysts are, because they added this stuff. And anyway, but I'm not so bullish where I'm going to dump a meaningful amount of money in them. I got $400 in them. Futu's the better name in my opinion. This is a steal of a deal of a brokerage. I was just reading this article. It says Futu, a Robinhood style platform with a notable valuation discount. They're not wrong. A 17 forward PE, and that Futu, that ticker symbol we were just looking at, is this app, this brokerage right here, publicly traded. So I love this app. It has so many cool features. It's free brokerage, and you can track all the super investors moves and stuff. And let's actually go analyze them real quick. I actually just was buying the dip on them even more. So I might be biased, but it's a fair company at a fair valuation. They do special dividends. So check this out right here. We can see their users, this app I'm on. Even if this app goes bankrupt, you're still FDIC insured for $250K. But this company is definitely not going bankrupt. If anything, they're taking over. They made $400 million of after-tax net income, after they paid $80 million of taxes. The growth rate, it's triple-digit growth rate every quarter for the past 4 quarters. I can't believe it. These brokerages make a lot of money from interest income. That surged 79% year over year. Brokerage commissions that grew 90% year over year. They just added crypto to the app, and this is their crypto revenue. It's triple digit growth for the past 4 quarters. There's so much future growth here, and Moomoo's a great brokerage in my opinion. Hey, if you want to get this app I'm on, my favorite brokerage, and want to use my affiliate link, it's in the link tree in my bio, first link there. Anyway, that's really cool. I bought them, and the interest income, if you look at the very middle of my screen, they give you a 3.35% APY on your idle cash. Well, they make like a 4% APY on your idle cash and give you 3.35% of it, and they pocket the difference and just milk that money. So that's what's kind of cool. Anyway, let's see here. TMC, the metals company. We won't really cover this one. I wouldn't touch this one because it's really hopium, because there's no fundamentals here. They're a startup. We go to the revenue right here. Well, it says 0 because they've never sold anything, not a product or a service. They're not expected to sell anything anytime soon. So yeah, that's why it says no data on the revenue. No data on the revenue. And if we go to the bottom line, they're burning through a lot of money. Dang, and that really leveraged up their balance sheet. They were able to raise cash the previous quarter, and it looked like they did good. But since they lost, $184 million just this quarter, that money has to come from somewhere. So look at how the liabilities perfectly went up by that. So they're in a rough spot because they're basically trying to make these underwater robots that take out the zinc and the nickel out of the ocean water and sell the precious metals. But it's really a tough one to trust and just buy and hold for the long run. They've seen a lot of stock price appreciation there. Check that out. Oh, well, but it's tough. I want to see them, I'll buy them. Here's what I'd rather do. I'd rather let them triple or something and then finally have revenue. It's a tough one to risk. Keep it as a super, super small position. Hey, shout out to the member Brian Paul. He said SNY. Hey, what up, Tutrick? He said Coca-Cola. We'll do Coca-Cola too. We'll get to all of these right here. Hey, bro, thoughts on Planet Lab and ONDS? Hey, we'll look at ONDS too. Ondas is an interesting growth name, but they're super small market cap. Remind me to get to Ondas. I'll get to that one. And Planet Labs, I think Alphabet is the largest shareholder of that stock, or Google. Maybe we'll get to both of them. So here's Sanofi. It sounds like SoFi, but it's like SoFi, but with an AN. Okay, the stock has not done well, sadly. Actually, wow, technically it's the same price it was in 2005. So you bought the stock in 2005. It's the exact same stock price, but they've paid dividends. What's the yield? So you get a 4.7% dividend yield. Oh, it's a European company. So let's first off convert the currency to USD. What do they do? Biopharma, okay. They have a lot of sales, 15.5 billion. Let's see what their bottom line is. Wow. They make, that's real too. They're really making like 2.5 to 3 billion of after-tax net income a quarter. So that's interesting with the 4.7% dividend. So let's actually go do a dividend payout ratio here. So they're making on average, call it 3 billion net income a quarter. Well, it's going to look different because they're a European company. It might not be here. Yeah, they don't include that here. Okay, they're a European company, so they report their numbers differently, but I guess right here it says the payout ratio is an 84. Another way, actually, we can do a dividend payout ratio is just go to the EPS versus a dividend. So they're making over $1 of EPS a quarter, and the dividend they pay out, but this is like an annual. They pay biannually. You know what? Biopharma name. There you go. European biopharma name. Let's see. Is there any? Nope. Okay. Sorry if that wasn't too helpful there. The forward PE is super cheap. It's a 12. Well, the current PE is an 11. Forward PE is a 12. So our net income is supposed to go down a bit. Maybe that's normal for the industry. They've done better than Pfizer. Maybe I'd rather own Pfizer. I don't know. So it's a European kind of name there. Let's do Coca-Cola real quick. Who owns Coca-Cola? Is the homie Warren Buffett. He's made a lot of money and a lot of dividends off the stock. If you go to his portfolio, 8.9% of his portfolio is just in Coca-Cola stock. And this is the kind of company that not only gives you a good dividend, but it should give you a good stock price appreciation, like 2 to 3% every year. And this is not the stock that will outperform the S&P 500, ever, in long run. It won't ever outperform the tech-heavy S&P 500, but it's kind of something that will just give you 6% of your money back a year. So check this out. If you go to the dividend, you get a 2.9% dividend yield, and you should just get like 3% to 4% stock price appreciation a year. The forward PE is a 21, so the current PE is a 23, so their net income is expected to grow. Who doesn't even if you don't like Coca-Cola specifically, they have so many other products that you do probably like maybe Body Armor, Smart Water, or Fairlife Milk. They have so many cool brands. But anyway, they print bottom line. Look at this. They make 2.2 to 3.8 bill of net income a quarter and return some of that to the shareholders via dividends. And it's a fairly valued stock, 21 forward PE. I actually own the Coca-Cola bottler right here, which actually has done way better, but it's because this one has a lower dividend yield. I want to show you some of the products. They have like a picture of all the brands. I don't know if it'll load here. Oh yeah, right here. So oh dude, so yeah, they bottle for all these different brands. Like they bottle for Monster. They also bottle, oh, this is the different company. Okay. But anyway, yeah, they own Body Armor, Sprite, Minute Maid, Fairlife, Core Power, Gold Peak Tea. So anyway, they own a lot of brands. Let's see. Hey, what up, Jace? Good to see you, homie. What app is this? Hey, what up, Akil? Yeah, if you want to get this app I'm on, it's actually in the link tree in my bio, very first link there. Brokerage, my favorite app to buy stocks on. Who recommended that? Hey, that was someone in the YouTube stream. We're streaming on YouTube and on TikTok. Sorry, I kind of read the YouTube chat first sometimes. But yeah, what up, Two Trick? Any thoughts on the president's buying Bitcoin? Yeah, actually they were merging with some like nuclear fission company. I don't want to really cover this stock because it gets political. Is Walmart okay to buy yet? Nah, not really. The sad part is, if you like Walmart, you'll love Amazon at their current valuation because that they're almost the same. But the forward PE of a 39 doesn't scream a great risk to reward. The market cap is 897 billion, so basically 900 bill. It's a tough double, especially at this forward PE, but it's a safe stock. It's a recession resilient stock. You get a 1% yield. But it's tough to really meaningfully buy at this price. Maybe start the nibble, but not really. It's a tough to full size position it. I used to drink Bang Energy like 5 years ago. Funny story about that. Monster Beverage actually is the one who owns Bang Energy. But it was in that picture because Coca-Cola bottles for that. Wow, look at Monster Beverage. This is actually this app. What is this right here? There is a bullish continuation triangle, 92% rise probability. Well, anyway, that's a technical analysis. You wouldn't believe just Monster Beverage has some of the best stock, one of the best stocks of all time. It's like a 200x multi-bagger since it's an insane performer. And the 35 forward PE. But here's the cool thing. Bang Energy, when it was super popular on TikTok like 5 years ago, when TikTok was first starting, they sold these cans that said the word super creatine on it. Monster Beverage sued them for $400 million. They lost. They went bankrupt. And then Monster Beverage bought Bang Energy. And now it's been a super synergistic, I kid you not, EPS accretive acquisition because they bought them at bankruptcy. It was so funny. And they received the $400 million. So, okay. NextEra Energy. Ooh, this is a cool one right here. This is a regulated utility. I actually like Southern Company a little bit more, but and you get a higher yield. But this is a monster utility play. They own Florida Power and Light. Just in the state of Florida, literally they're the monopoly for Florida. This revenue is just from Florida. They make $4 to $5 billion revenue a quarter from their Florida Power and Light. And they also just opened like a nuclear reactor with Google. Oh, it's not going to be in the weekly news, but they're opening like this nuclear reactor with Google. They have a nice yield. It's a safe company with a safe yield, a 2.8% dividend yield. That's a pretty good yield. What's the multiple too? A 21, 21 forward PE, and they make on average like $2 billion net income a quarter. So yeah. If we go to the ticker symbol VPU ETF, which is all of the utilities publicly traded in an ETF by market cap weighting, NextEra Energy is the biggest. And then the second biggest is Constellation Energy. I do own that stock. And then it's the fourth place is Southern Company. This is the one I'd actually recommend a little bit more than NextEra Energy, or maybe you can buy both. I still like NextEra Energy. But yeah, I actually just bought them too. So this probably I'm maybe a little biased, but yeah, I bought 11 shares of them. We're just slightly down on this company, and they're also at a fair valuation, a 20 forward PE. I think that's the same as the other one, but yeah, we bought them. They own so many other great utility names, so regulated utility as well. So even if they don't get their 7% return, the government will give them like 3 to 4%. So that's what's cool. But on the other side, they can't raise prices on customers. But yeah, the VPU ETF is another great way to just get exposure to the whole industry. And that VPU ETF, if you're looking for just something so safe with a good yield, this ETF right here, I kid you not, has a 2.8% dividend yield, slightly higher than this. 2.8% dividend yield. It literally, these regulated utilities always, just for history, just give you, like, when you include the dividend, around 7% of your money back here. So if you just want 7% of your money back here, this is a great, ETF with a bit of a higher yield to get exposure to utilities, the regulated ones and unregulated utility ones. I own in my Robinhood account my main utility play because I wanted to buy I was looking for what is the best utility stock out there, the growthiest one, because I want exposure to one, but I want the growthiest one. CEG's the one I picked, and I'm up 73% on them. It's tough to buy this one now, but this is the number one nuclear play and natural gas and geothermal play. But after the Calpine acquisition, but they own this company right here is the purest nuclear play in the U.S. They own over 30% of all the U.S.'s nuclear reactors. So there's not even a close second there. Anyway, I kind of get into it a little too much. We're talking about Coca-Cola. Check Celsius, owned by Pepsi. Actually, Celsius, about 7% of it is owned by Pepsi now. And Pepsi also gave him in the transaction the Rockstar beverage brand. So if you heard of Rockstar, that's now owned under Celsius. And Pepsi is also agreeing to bottle and like distribute all of the products for them now. So they had to like terminate their old bottling facility. It was a one-time $170 million charge, and now it should improve their margins for the rest of the time. Looks like my Wi-Fi just puked there for a second. But yeah, it says they lost 61 mil in net income this quarter. It was all from that one-time adjustment. They actually made a record 166 mil this quarter. Sales were up 172, 83% last quarter, again, from getting the new products and Alani. But the forward PE of a 33 is a little expensive. That's a slight bit cheaper than Monster. Monster's at a 20 or a 35 PE. They're at a 33. Actually, I really like Celsius after all the news. Actually, the chart on a technical point of view, hey, doesn't that maybe look like it's going to go higher? I don't know. But yeah, actually, I really like Celsius. I put them on the watch list for sure. They own Alani, Celsius, and Rockstar Beverage now. Okay, sorry if I'm missing so many stocks here. You know what? What up, Young Zell? He said GM. Let's do GM. It's a bit of a boring one, General Motors. But wow, I'm actually surprised. Look at that. Maybe from the tariffs and stuff helping them out, but they had a great earnings report, gapped up, and it just has gone up ever since. So that's how you know it was a great earnings report. Let's go analyze this company. As a matter of fact, forward PE of an 8. So wow, they're trading at 8.4 times forward net income. The current net income multiple is of 15, so they're expected to nearly double their EPS. So maybe, okay, so they have been missing on EPS the past 2 quarters, but if they just meet this expectation of $1.84, $2.20, then the forward PE really is at 8. Looks like the sale, this first off is not a stock wow, they're pretty much at an all-time high. I don't know if this one's really going to outperform the S&P 500 in the long run. Well, let's see right here, because the sales growth is slowed. It's negative the past 2 quarters. Yeah, so the revenue's down 0.3, the profits are down by 70, and then 45, then 10. So their margins are going down. Yeah, look at their gross margins here. It's a low margin industry game. They historically get 7% net margins, but the stock has done so good, and you get a good yield. I think a 0.65%. If it's true that they just hit their expectations, this stock honestly might just continue to go higher at an 8.4 forward PE if they meet those expectations, and even if they slightly beat them. So interesting. I'm surprised they're doing so good. One of my favorite car names is actually Ferrari. The highest out of all the companies that sell cars out there, this is the company that keeps the most bottom line. They have 20%, 20 to 25% net margins on Ferrari. Tesla's lucky to get like a 5. General Motors got like a 5 or 6, or used to. And hey, no way, yo! Shout out to Ronnie on Label/Maddie on the YouTube stream for the 25 run. He says, check the phone battery. Yeah, we're at 30%. We're good right now. We're chilling. But yo, thanks so much, dude, for that gift. I hope y'all are having a great kind of holiday week. Let's see. General Motors went up because they stopped making EV cars. Ooh, really? EV's not the future. Hey, thanks for that counting. Maybe that's why the future sentiment's now in their favor. Um, Brian said Sony. This is a Japanese company. Oh, and then I saw 05. Yo, remind me to get to Fabrinet. That's an interesting small cap. Sorry, I'm a little behind here. We got some backlog of stocks we got to look at. Like I do want to get to Four and some of these other names. So here's Sony right here. This is a Japanese company. Sony PlayStation, Sony Music Group. They're like an ETF almost. The forward PE is a 20. So that's a fair valuation. I feel like basically. They're a Japanese company, so we'll convert the currency from Japanese yen to USD. USD to get a better idea here. PlayStation unit sales was 3.9 million. Yeah, when they released it, they sold 10 mil of the PS5s. Let's see, full game software as a service. So whenever you go buy a game in Sony, they take that 30% fee. Crazy record or recorded music revenue. So yeah, they have I forget who signed it in, but it might even be like. I don't think Taylor Swift anymore, but anyway, doesn't matter. They have a huge music, they're in Sony Pictures, entertainment, technology, imaging solutions, gaming networks. So, and if we just go to the bottom line here, and again, this is in USD after tax, they're doing 1.5 to 2.5 billion net income a quarter. And you get a 0.6% dividend, very low payout ratio, 10% payout ratio. I love that. Low payout ratio and a good 0.6% yield. That's a higher yield than Apple and a lower payout ratio. So, Sony's interesting. Rocket Lab is crushing it. Yo, congrats if you got Rocket Lab. Oh, and Braden said, Chipotle. Ooh, Chipotle's another good one too. I started watching you a few years ago. What is your profit so far? Oh, that's a good question. Maybe we'll check that out. Depends on the portfolio. I could show you my open profit and loss and all that. We kind of already went over that a few times. But let me show you this real quick. Here's Fabrinet. This is a nice growth company at a 35 forward PE. The current PE is a 49, but the forward PE is a 35, and they're at an all-time high. Well, pretty close to it if you look at the weekly. But yeah, they're in telecom, datacom, data center interconnect. Let's see how that's growing. I want to see how that one's growing specifically because it sounds, oh, wow. So it looks like year over year, I guess we only get 2 quarters of this when they started breaking up the segments, but 92% year over year growth. Automotive revenue, that's up 18. Oh, we get some more data with these ones, like the telecom, that grew 48% year over year. So let's just blend it all together. When we blend all those together, the total revenue's up 21%, after it grew 17, after it grew 5. So the growth rate's growing over here. So they did 980 mil of revenue, and on that they netted, wow, this is their bottom line after tax. They're making 90 mil of net income a quarter. Especially at this growth rate, it's going to be 100 mil a quarter. They have a great balance sheet. Let's see how much cash they got. 900 mil of cash. Looks like they're making interest on their cash too. Yeah, because they have so much net cash, they're making 7 to 10 mil of literally interest on their cash that just goes to their bottom line, which is why the operating profit is, that's why the net income's higher than the operating profit, because the interest that they make is not included on this. And so that's really interesting there. Let's see here. Look at the analyst expectations too. Wow. Just up and to the right. Revenues, and they always beat on it, but it's going to go 1 bill, 1.3 bill. And let's see the EPS. EPS too. It's supposed to go to 322. That'll be a record EPS, right? Yeah, it's never even been to 3 before, and it's supposed to be 322. Anyway, a lot of future growth. It might be a little expensive at a 36 forward PE, but really cool there. Yeah, here's this portfolio. Here's our open profit and loss. We're up $13,000 all time in this account. We have a Webull portfolio as well. Yeah, here's our open profit and loss. We're up 18.9% all time in here. By the way, at the very beginning and very end of every stream, we always go over my entire portfolio. Oh, Sergio said, what app is this? So much info. Yeah, by the way, all these apps, all these are all brokerages right here where you buy stocks on. They all ask for a bunch of information and send you tax form, but this one's a great brokerage. It's very simple. But yeah, this is my favorite one. It's free, costs nothing. If you want to get it, it's in the link tree in my bio, very first link there. You're right. I love you can buy stocks on any platform, but this is my favorite platform to really analyze stocks on. Because they give so much, like on Robinhood, you could not get any of the same data. Yeah, all these, actually, they're all affiliate links. If you want to get Robinhood or Moomoo, they're all in the link tree in my bio. This one's I'm on very first link there. Can you check out 4? Yeah, let's do FOUR. I wanted to get to that one. So this is Shift 4 Payments, So let's see. This stock is the same price that it was in 2020. So that's a little unfortunate. Let's see if we can figure out why this stock is struggling. The forward PE is cheap. It's an 18 forward PE. Where does the revenue come from? So the US is 83% of the revenue. I like that. So a little bit of net income year over year declines. Maybe it's adjusted. Yeah, so that was some weird one time adjustments apparently. The revenue growth is phenomenal, 29% after 34, after 25. So nice top line growth. And it looks like their assets are growing. Did they do an acquisition? Well, here's how you tell. Yeah, look at this. So if you go to cash from investing activities, you want this to be negative. If this is positive, that means they're actively selling out of their assets, but they bought some assets for 2.9 or 2.65 billion. So that's kind of why they're it looks like their balance sheet capped up by that. So that should right. So maybe that's why they're seeing this one-time adjustment net income. But yeah, because before that, the actual business grew 36%, or the profits did, to a record 111 million. Yeah, it's never even been above that before. This was a record profitability quarter, record sales quarter. It was, with this acquisition, but record sales and record profits this quarter. And the forward PE of an 18 makes sense. So yeah, look at this. Here's kind of why. If we look at the EPS, analysts expected 70 cents this quarter. They only did 17. Last quarter was 485. They only did 30. So they're missing like crazy on expectations. But if they can just meet these expectations, then the forward PE really will be right. So there you go. There's shift 4 payments. We want to see them hit those expectations. All right. Let's see here. Oh yeah, I wanted to get to Chipotle and Astera Labs. Astera Labs, the next NVIDIA. Astera Labs is expensive. I do really like them. This is a great growth name. Oh, hey, Northern Jays. Yo, thanks for those gifts there. Do the trade desk. Oh, yeah, hey, let's do the trade desk after this. Thanks for those 5 roses there. We'll check that one out too. Astera Labs trades at 113 forward PE. So that's a bit expensive, 113 times forward PE, but this is the kind of stock that deserves a high multiple. Check out the revenue growth. The revenue's up 103%, after grew 200%. Like at the bottom, triple digit year over year growth every single quarter. So revenue is 230 million, and not just the revenue that's growing, but the bottom line. Look at how the net income's growing like crazy, and just a huge safety net cherry on top here. Takes a lot of risk off the table just to have a fortress balance sheet with no debt whatsoever. They don't owe anyone any money, so whenever they hit this net income and free cash flow, their assets just go up. They retain the cash and they can do share buybacks, acquisitions, but they now have $1.13 billion of cash, and they're not just sitting there doing nothing with it. It's earning interest. Their interest is going up. They're making 11 million of interest on their cash a quarter, which adds even more to the bottom line. So anyway, I like Astera Labs. They're beating on all expectations every quarter. Analysts expected 206. They did 230. They look at the EPS beat. They expected 23. They did 50. So look at the EBIT, earnings before interest. They expected 76. They did 96. So even on the non-adjusted, they're triple beating. So this is a stock that deserves 100 forward PE, or it deserves a high multiple. I don't know about 113 PE to fully size. If I didn't own this and weren't up a bunch, I don't own this one, but it would be tough to full size position it at current valuations. You'd want to hopefully try and get it at a lower valuation, but that's the kind of stock that's always going to have a high valuation. But that's the growth you want to see in a company, one that you can be comfortable with, to dime in hand. So here's the trade desk. It's unfortunate, but this one might even be a little expensive, even at this kind of dip right here. They're seeing a lot of increased competition. They're a CTV kind of advertising company. Amazon is kind of eating their lunch right now. Like, one of their biggest customers used to be Netflix. Netflix used to get all their advertisers through the trade desk, but now they do it through Amazon since it's cheaper. I was kind of reading, here's what's kind of cool on this app. You get the Morningstar research, and I was kind of reading, what did the bulls say about the stock? What did the bears say over here? And it's like, in the third one is, Amazon's demand side platform directly targets TTD's advertising space on the open internet, and its scale allows it to outcompete on pricing, pressuring their margins. Most advertiser dollars are routed to the ad giants. Firms like Google and Meta would have no incentive to work with them, but there's some obviously good news. They have proprietary algorithms for identification for real-time ad bidding, perfect solutions. As an unbiased advocate for advertiser budgets, TTD has structural advantage over less transparent ad giants like Google, Meta, Amazon. So interesting name here, but it's expensive. This is the kind of, even after this massive dip at this 52-week low, current PE is at 42. The forward PE is at 36. So that's actually not too bad at 36. They make good net income. I'd want to buy this one, but not yet. I feel like I just have a scary gut feeling this one might go even lower because it's still not cheap. It's not cheap enough. They great. I still like them because look at this bottom line. They're making great net income. They're more expensive than Amazon, more expensive than Google, more expensive than Meta by a long shot. So it's tough to pick up this one at their current valuation. Yeah, see, that's why they're the same price as they were in 2020, and the valuation is still not super cheap. So hopefully that was somewhat helpful. I didn't mean to be, I don't want to be so bearish on this one because I do like them. I like the bottom line that they make. Like the current PE is at 42, forward PE is at 36. They are expected to grow their EPS like 30, 40% or 30%. So interesting. All right, let's see here. Nuclear stock is crashing. Hey, what up? Alex says, hello from Thailand. What do you do here? Hey, we're just kind of looking at stocks and we're trying to analyze them and see if we can find any new stocks we can add to our watch list. Um, let's see. Temu PDD. Yeah, hey, this is a Chinese company right here. Yeah, what up, Racing? Of course, they're Chinese at it. But yeah, this is the ticker symbol PDD is the company that owns Temu. So it's kind of like the like cheaper Amazon. What's the evaluation? Yeah, a 10 forward PE. It can't get cheaper than that, but these Chinese names always kind of trade at low valuations. If you go to their bottom line, they're making great money, easily 2 to 4 billion of after-tax net income a quarter. So online marketing and service, transaction services, so yeah, we can see their active users. They got 750 million monthly active users. Interesting there. So 10 forward PE, so basically China e-commerce play. Maybe it's like an Alibaba. So revenue missed slightly due to competitive pressures. Significant improvements in fee reductions and merchant support optimize. Active user base retained stable. So yeah, there's Pinduoduo. I'd kind of rather own Amazon, and I do. Amazon's making something called Amazon. What's it called? Oh, it's not Amazon Flex, but it's like their own Amazon Nova. Maybe it's called. It's kind of like a Temu competitor now. Gold is on fire. You're not kidding. Look at IAU. It's literally the ticker symbol gold. So, in matter of fact, just look at gold. But this is the ETF of the commodity gold that you could buy and sell if you wanted to. Just XAU to USD. Literally gold moves the exact same as it. It's at an all-time high. So if you ever bought gold, you got any gold chains, gold jewelry, maybe go hit up the pawn shop. And I kid you not, it has doubled in just the past year. Gold's been on a massive rally. These precious metals like silver too. So yeah, congrats if you got any precious metals. Those have crushed it. Yeah, nuclear stock is crashing. SML. NNE. Yeah. These are SMR plays. These are the kind of nuclear stocks you don't really want because they're trying to make these SMR, these small modular reactors, and these are all proof of concept. There's only 2 working SMRs in the world, and none of them are in the US. And the first SMR that's supposed to even come online in the US is in 2030. So it's a tough one. If we go to the revenue right here, they're a startup. It says there's no data here because they've never sold anything, not a product or a service. So that's why the revenue says no data. So it's just a tough one to really diamond hand. If you want real nuclear assets, in my opinion, check out ticker symbol CEG. They literally own over 30% of all the US's nuclear reactors. They pay a dividend. They do share buybacks. They're doing synergistic M&A. They've done great. This is the one that I would want. And I do own, but this is the one I'd want to get exposure to if I didn't own any nuclear and wanted. That's the best, safest way, and I think going to be the best performing one in the long run. Especially because like the Oklo, for example. You see, when a company doesn't have real fundamentals, the rally never sustains. That's why we go over financials so much. Like Oklo is another one that's so hyped up, but it's a revenue-less startup, not expecting revenue for years. I wouldn't really want to own these. I'd get CEG, VST, GEV, one of those. Hey, what up, OLP Papa? No way with the 5 gifts. Thank you, dude. He says DBRG if you get the chance. Yeah, let's do it. Thanks again. Digital Bridge Group, FEIM released earnings last Thursday. Ooh, we'll check it out. Charles said, what happened to Broadcom? Hey, we could look at Broadcom too. And someone said, the Vigilance said, can we look at SMCI? Actually just completely sold out a super microcomputer. So not one I like. Sad. I sold it for a profit, but and hey, Ahmed, dude, thanks for the gift there too. We'll look at Sterling. Yeah, that's kind of like Powell Industries' big competitor. They've all both done great. So here's Digital Bridge Group. Their forward PE is a 63. The current PE is a 185. So they are expected to grow their EPS by a massive amount. Something happened down here. Look at that. The stock went from 960 to 14. And there was no earnings on this day. There's no earnings report. So there's some other external news factor that caused that, maybe some upward revision to guidance. I don't know. Oh, so if we go to their current right now revenue, it's nothing. These year-over-year declines are not good. Revenue's 3 million, losing a couple mil. But maybe the news is they just bought an asset or something like that. I really don't know. I wish I could help you out there. Digital Bridge. Huh. Is this a blank check company? Asset manager. So they just buy and sell companies under the ticker. So anyway, the EPS is supposed to grow to 63, 2.7 bill mark or 2.37 bill market cap. I don't know. I want to know what that news was, because maybe they bought some kind of cool asset. So yeah. Okay. So let's do Sterling. Thanks again for that gift there. So here's Sterling Infrastructure. They've been a monster performer, just like Powell Industries. They don't pay a dividend. What's the multiple? A 30 forward PE. It's more expensive than Powell. Let's see. So yeah, E-Infrastructure Solutions. Check this out right here. This is what you want to see. It's up 58% year over year to a record. It's never even been close to 400 million before. It was 417 million just this quarter. Like, insane growth on their e-infrastructure. With Transportation Solutions, looks like that fell 25% year over year, and their Building Solutions fell 1%. So these are kind of probably residential exposed, but that e-infrastructure group is probably leading to why the stock has done so great. Oh, so look at this. That's probably their most highest profitability segment too, because if we go to the revenue, all those segments combined, the sales grew 16%. So the revenue's up 16%. And the net income is up by 47. So what does that mean? It means they're expanding margins. Yeah, look at that net margin, year-over-year growth rate every quarter. Margins are expanding. Gross margins are going up. Free cash flow is great. So this is a great growth company. Yeah, it looks like they just bought a company for 500 million. Maybe that's why. Look, cash from investing. They just spent 460 million buying some company. And they deleveraged. So cool name there. Cool name. Yeah, Powell Industries is one that's great too. It pays a small dividend. Thanks, Dad. So FEIM released earnings last Thursday. Hey, shout out to Looney, the YouTube member. He says Frequency Electronics. Wow, this is at an all-time high. That's insane. Let's actually go see what caused that. Let's go look at their numbers. So FE New York, Zypher, so I don't know what these are. Let's see. Revenue is 17 million. So they don't have much revenue, 15 to 20 mil of revenue a quarter, but they are profitable. Check that out. They are making, it's not much, but it's better than them losing net income every quarter. The fact that they're making net income every quarter, good balance sheet too. Look at that year over year. The liabilities were 53% of the assets. Now they're only 36% of the assets. That's very cool. They're not selling out of their assets either. So what do they actually sell? Let's see. They're headquartered in New York. It provides precision, time, frequency generating, and synchronization products. Let's see if we can pull up their website, get a little image of one of this stuff. Nope. Okay. So these are some of the industries they're in. Anyway, interesting there. And click on one of these. Land Solutions. Airbase platform programs. Anyway, interesting company there. They're small, but I like that they're profitable. So no forward PE, probably just because there's no analysts covering this one. And $522 million company, 24 forward PE, or 24 times net income right now. That's interesting there. Yeah, hey, Ahmed, thanks again for those gifts there. Yeah, we'll check out LGN in a minute. Yes, sir. So I want to go over Super Micro real quick because I wouldn't, it's tough to buy this one right now. So I actually just completely sold out of Super Micro here. I'll actually show you that real quick. But I've just been disappointed, it's as a shareholder. So yeah, we sold our 10, we only had 10 shares. This was like $300, but yeah, we sold our 10 shares. We bought them a while back. Actually, we bought them during their whole accounting fraud shenanigans. We bought all of our shares on this day, didn't buy. So we bought all our shares at $26, sold it at like 32. But here's the bad news about Super Micro. If we go to the revenue right here, the revenue grew it actually declined. So the revenue declined 15%. So the sales are down 15, and the profits, the net income, fell by 60. So that's really bad because that means margins are being compressed. This is a what they do is they just install, your servers, your GPUs for you, and it's a total commodity, and their margins are getting crushed. They're giving customers bulk deals at lower prices, and their net margins is literally used to be 8, 10%, but it just goes down and down every quarter, and I just don't like that. And it's like not an adjustment either. Like it really is. Like the margins are getting crushed. So um no, I'd rather honestly buy like an Nvidia or a different, or actually even a Dell. A Dell does the exact same thing. Ticker symbol Dell. So is this Allegiance right here? LGN, Allegiance Group. They basically do what FIX and EME do. Um, let's see. So a 28 forward PE. They're on my watch list. Yeah, I remember this one. Can you buy stocks on companies registered on the indices outside of the USA too? Yes, I can. I do own a Chinese company, or actually it's a Hong Kong company. I own a European company. I own an ADR. Like, yeah. Um, let's see here. So installation and maintenance. So let's see how that's doing. This is the business you want, this reoccurring and maintenance revenue of the HVAC systems. Let me check out their website right here. So engages in installation of mission critical systems and buildings. So yeah, like MEP work, I'm guessing mechanical, electrical, plumbing, all that work. Um, okay, they have 1,200 engineers, of over 1,200 MEP engineers. Yep, technicians and craftspeople. So yeah, they're in the whole data center, semiconductor space, all these different sectors. Yeah, healthcare, commercial real estate. So let's see. Yeah. Wait, so fabricates and installs HVAC systems, piping, and other MEP systems in new and existing buildings. So, yeah, let's go check out the revenue. The revenue's up 26% year over year. That's really good growth. Revenue's up 26%, and they're not profitable yet. Looks like they are on operate. So they are making money every quarter, just not. They're just having a little one-time adjustments, maybe from the IPO or something, but they're super close to profitability. Yeah, the forward PE of a 27. Wow. So let's see the EPS expectations actually. So it's supposed to be 3 cents and then 10 cents. That's interesting there. Yeah, 27 is pretty good. Hey, appreciate your hey young Zell, dude. Thanks for the 5 little Tom Christmas. No way. Yo, thanks for those gifts there, man. I appreciate that. If you get another stock you want me to look at, let me know. I appreciate that. So Charles said Broadcom. Yo, I'm a little behind on the stocks here. I do apologize. Uh, your Amazon looks perfectly timed. Yeah. Yo, I can explain that. If we go to Amazon right here, when you're patient, when you don't feel like you need to buy the dip on a stock, but you just always keep watch of it. You can always just kind of like feel whenever a stock is on a dip. Like when I just always buy it when I feel like it's oversold, and like I'm not pressured into buying it. Like I don't care if I buy more shares or not, but I just saw these and I'm like, it just looks short term oversold. And I'm trying to buy it's good valuation. I'll just buy more of Amazon. I'm looking to buy more of them too. But yeah, I kind of always like to DCA into stocks. Even if I'll DCA up on my stocks, I do that all the time. Like I was doing that for Amazon, Amphenol too. Like we bought most of our shares way down here. $67 a share. Our purple line is our cost basis, but they're so quality. I don't mind even buying more shares way up here. So let me go to Broadcom real quick. This is a semi play. Also, their VMware business is booming right now. So they're expensive though, a 41 forward PE, but the whole semi space, this is the kind of stock that deserves a 41 PE. That being said, if I didn't own any Broadcom, I wouldn't if I wanted this as 5% of my portfolio, I wouldn't make it 5% of my portfolio today at their current valuation. Maybe I'd make it 1% though, because it is such a great name that they don't really ever get to a cheap valuation that you'd be happy with paying. But yeah, a lot of people know them for their semiconductor solutions, which has just been booming. This is the annual growth. I mean, every year it just hits a new record every year, every quarter. And same with their infrastructure software. This has been the massive growth with VMware. Like in 2023, the revenue was 7.6 and it was 21 and a half. Now this year, this is fiscal year, but same four quarters, 27 billion. of annual revenue. I mean, it just hits a new record every year, every quarter. It's high margin too. So yeah, look at this right here. If we go to the revenue's up 28% year over year. They did 18 billion in revenue, and on that 18 billion in revenue, they netted 8.5 billion. Actually, that was a one-time adjustment, I think. Yeah, but they really netted 7 billion in net income, a record profitability quarter. And same with the FCF, which is free cash flow. This is what you want to see for a stock to diamond hand. 7.5 bill of free cash flow, up from 5.5. Like, they print free cash flow and net income, and you get a dividend of 0.7% dividend yield. They do share buybacks too. I do like them. All right. Um, let's see here. Hey, yeah, if y'all want, hit the like button. We do. Yeah, if y'all want to hit the follow button or like, we do stream every single day. I might be a little more busier this week, but I'll still try and stream every day. Well, we'll see about this week. But anyway, if it wasn't a holiday week, we literally stream every day, and I sell nothing at all. Please watch out for people impersonating me. I don't have a course book, WhatsApp. I don't literally sell anything, no book or anything. But I do have a YouTube channel. If that's the only way to help me out, if you wanted to, just subscribe to my YouTube channel. It's called Nathan Roberts. Also in the link tree in my bio. You can just type into YouTube Nathan Robert. Oh yeah, what about Nvidia? Let's do Nvidia. You know, a lot of super investors own Nvidia. I'll actually show you that real quick. This is the thing. If we go to Nancy Pelosi's portfolio, you know, she owns a lot of Nvidia. 13.5% of her portfolio is in Nvidia. You know, it's actually like her third largest holding, I think. And not just her, but like, I'm going to like the Soros portfolio right here. Oh, I think he used to own a lot of NVIDIA. Oh, well, you know what? Anyway, you know, NVIDIA is even so big that NVIDIA literally owns some individual companies. You know, NVIDIA has massive stakes in like CoreWeave. Oh, come on now. My wife, there we go. Yeah, they own CoreWeave, APLD, ARM, Nebius. They have stakes in a bunch of different companies. You know, the president, I think he has one of his largest holdings in NVIDIA. Yeah, right there. Anyway, I don't even know who some of these people even are, to be honest with you. But let's go to NVIDIA. NVDA, this is the picks and shovels play of this whole AI boom. You know, chips, GPUs, they make the best GPUs. So they're at a super fair valuation, you know, a 27 forward PE. What platform do you use? Yeah, hey, if you want to get this platform I'm on, it's actually a brokerage where you buy stocks on. It's in the link tree in my bio, very first link there, a broker called Moomoo. But they traded a 27 forward PE. You know, for NVIDIA, that's super fair, I feel like. But it is a tough double. You know, if we look at the market cap in the top right, they're worth 4.45 trillion. So if you buy the stock right now, for you to double your money, they'd have to be worth, you know, basically almost $9 trillion. But this is the stock that I think is going to outperform the S&P 500, even if you buy it today. So it should just still, for the rest of time, probably give you 8% plus 8 to 10% of your money back a year. And they just print money. We can see their GPU market share just keeps on going up. It's a 24%. They have this automotive software that competes with Tesla that a lot of companies license out from them. Yeah, the data center business is booming. Like, this is why NVIDIA deserves all the hype around them. If we go to the revenue this quarter, it just continues to grow. It's 57 billion. Out of this 57 billion of revenue, they netted, you know, after-tax net income, 32 billion. So that means their net margin is a 56%. So if you go spend $100 on an NVIDIA GPU, the company keeps, after paying taxes and stuff, 56 of those dollars is pure margin. And that's why they're able to raise prices so much, because it's basically their customers right now are mainly Mag 7, like freaking, or just big companies like Oracle, you know, CoreWeave, you know, where NVIDIA's given them money to prop up orders, and there's a circular motion kind of thing going on right now, which maybe is why the forward PE is a 28. But yeah, like Amazon and Google and Meta, they're all buying a ton of NVIDIA chips. Hey, yo, try not to spam there in the chat. Hey, um, hold on here. Yeah, that's not cool, man. Oh, I didn't realize it would delete the message. Well, hey, maybe we'll get to Nike. Yeah, that's not cool, man. Okay. Let's see here. Thoughts? Hey, what up, Flack? He says MELI. Yeah, Nvidia has a super small dividend. Basically, Nvidia does not pay a dividend. So yeah, here's Mercado. I believe this is just like an international Uber play. So international freaking Amazon, I mean. Yeah, South American Amazon. So look, Brazil is most of the revenue. It's 55%. So Brazil, then Mexico is 22%. Argentina. So notice the US isn't on here. You know, it's a e-commerce play, you know, commerce services, financial and credit services too. So let's see, they make great money. if we go to the bottom line, they're easily making 500 mil in net income a quarter. Really good bottom line over here on MELI. What's the forward multiple? Forward PE is a 40, so that is expensive, a 40 forward PE. That makes Amazon look like a steal of a deal. But total payment volume, 71 bill. Number of items sold is 635 mil, so they're selling more items. So yeah, kind of like a Mexico Amazon. Pretty cool. Hey, yo, shout out to the member Jeff Mack. No way. The legend's here. He said AMAT. We'll check this one out. Oh, and AMD stock. What up, counting? Yeah, maybe we'll try and get to AMD too. I do own AMD actually, full disclosure. I love Nvidia, but the reason I picked AMD over Nvidia was we just looked at Nvidia. I thought it was an easier double. Remember how Nvidia's market cap was 4.5 trillion? Just from law of large numbers, it's hard to double 4.5 trillion. But Nvidia or AMD is worth 348 billion, and at the time when I bought them, they were worth like 220 billion. So I just felt like it was an easier double. Plus, they had the similar growth, or actually, not as high growth. But anyway, I do own AMD. But let's look at AMAT right here. Applied Materials. Wow, they're pretty close to an all-time high. So congrats if you own this name. I think they pay a dividend as well. Yeah, what's the yield on this name? A 0.66% dividend yield. And notice how fast they raised the dividend. That's pretty good. That's inflation beating for sure. Let's see if there's any coverage on this company. Nope. Nothing really AI there. So PE is a 29, forward PE is a 28. So semiconductor plays, semiconductor systems. We can see the growth is kind of slow. Like if we look right here, it was down 8% this quarter. That might be why. If we go to the forward multiple right here, that might be why, the current PE is a 29 and forward PE is a 28. That slow growth, like it's nearly the same. But they still print money. Check this out. They're easily making, if you average it out, and that was a one-time adjustment that one quarter. Like they're making $2 billion a quarter, but it looks like, revenue fell 3.5 and profits fell 7.5 this quarter. But let's say they're making $2 billion in net income a quarter. The dividend cost only $365 million, so they have a lot of room to raise the dividend. And since they have so much leftover cash, look at the top here. They're doing massive buybacks. Pretty much over $1 billion of net income a quarter on buybacks. Since they retain like 700 mil a quarter, after doing dividends and share buybacks. So and that still beat expectations. They beat on revenue this quarter. They beat on EPS and they beat on EBIT. So even though the revenue declined 3.5% year over year, analysts were expecting it worse. They were expecting it to be 6.67. They did 6.8. So maybe that's why they did good on earnings report. So hey, it's all relative. You got to see what the analysts were expecting here, and they're beating expectations. So interesting. So maybe the forward PE is actually lower if they keep beating. Where do I start? Or I'm not sure what that means. Or if you want to buy stocks, or you start with a brokerage, this is my favorite brokerage to buy stocks on. It's free, costs nothing, and has the best free tools to analyze stocks. If you want to get this brokerage I'm on, link tree in my bio, very first link there. It is an affiliate link, so if you go and deposit $100, you'll both get some free stocks. And on your idle cash, a lot of people like it because you get a 3.35% APY on your idle cash. I also have full disclosure, I have all the other brokerages linked up there too, like Robinhood, affiliate link for this one too. Second link in the link tree in my bio. This one's great, super simple. Just doesn't have all the analyzing tools that this app does. I feel bad for Nike right here. So thoughts on Nike having a comeback? What up, Neezy? Let's check it out right here. So the sad news about, I actually completely sold out of Nike. I sold it at $79. I didn't like the financials and what they were doing with the management and everything. It's tough because they're sad is they're expensive at this price. The forward PE is a 29. So even at that's more expensive than Meta, and slightly this is the same valuation as Amazon. Actually Amazon, you won't believe this. Amazon has a 13% market share for shoes and apparel sold in the US. The Amazon Basics private label brands literally has I was just reading this on CNBC and it's true. Amazon is actually a huge competitor for Nike. The forward PE of a 29 doesn't scream, a steal of a deal. That's the tough part. If we go to the revenue right here, the revenue, it doesn't really beat inflation. Revenue's only up 0.59. So the revenue's up 0.59, but the profits, the net income is down by 32. Yeah, and the profits are down by 27. It really is. So the margins are being compressed. Gross margins down by 7, net margins down by 32. So it's a tough one to pay their current valuation for. Plus, they pay a dividend and it kind of suffocates them. They have a 73% payout ratio. So I don't like Nike, sadly. It's just not a story I love right now. And I used to own them. What happens is, yeah, hey, again, W, if you want to get this app I'm on or brokerage, it's in the link tree in my bio, that very first link there for this app. Robinhood's the second link. This one's called Moomoo. So does Christmas rally usually make stocks go up or down? Usually stocks go up during Christmas because just no one's trading and there's no sellers in the order book. Kind of like Thanksgiving week, just from a psychology point of view. But what is this one? CFG, too high to buy right now? Let's check this one out. What's your cheapest stock? What does cheapest mean? Cheapest valuation, I don't know. Honestly, I don't know. Maybe 20 PE Powell Industries, or I don't know. So here's Citizens Financial. Check this out. They're at an all-time high. So congrats if you own this stock. You got to be up on your position. Let's see the dividends here. I think, did this say they paid a dividend? Yeah, they do pay a dividend. What's the yield here? Because these banks, I think this is a bank, they usually have high yields, like close to 2%. Yeah, you get a 2.8% dividend yield. So not too shabby here. And they've had some massive stock price appreciation. So yeah, consumer bank and commercial bank. I don't see any like wealth management, but because this stock has massively underperformed JP Morgan and Goldman Sachs and a lot of the other banks. So like, even though it's at an all-time high, like they're barely up from their 2021 price, and all those other ones have like doubled and tripled since then. So they've definitely underperformed, but let's see. Here's their bottom line. They're making 400 mil. Actually, they made 500 mil this quarter. Maybe that's why they did so good and gapped up on earnings. They're making 500 mil of net income this quarter. Let's see how much the dividend cost. Dividend cost only 217 mil. The cost of the dividend's going down because they're doing buybacks too. They're doing like 100 to 200 mil of buybacks a quarter on top of paying dividends. So they're very shareholder friendly at this price. Not too shabby there. Yeah. What would you consider a good deal for a forward PE? It all is so it all depends, because a company can have a like a Fiserv, a 12 PE, a 12 forward PE, still be overvalued. So it all depends. And there's something could have like a 300 forward PE and still be cheap because they just got profitable. Beat Dish, what's up, man? He says, LN, hopefully I can find that one. LNVGY. We found it. Oh, Lenovo. They kind of make like those laptops, So sadly, they've not done too well. They're the same price as they were back in 2014. Kind of just sell a commodity. So I actually am curious. Let's go look at their net margin. It's probably going to be single digits. What's the forward PE? The forward PE is a 9.7. So see, a 9.7 forward PE, it could still be expensive though. So let's see what their margin is. Net margin. So yeah, look at this. This is probably even a one-time adjustment too. They're lucky to have a 3% net margin. So let's see. They're netting though. This is good net income though. They're easily making, 500 mil of, that was a slight adjustment, but they're making like 300, they're making 400 mil of net income a quarter. You get a 4.2% dividend yield there. So not too bad. Intelligent Device Group. So yeah, this is their annual revenue on their main business. It's lower than it was in 2020. Infrastructure Solutions. This one's growing massively. This might be kind of like the super micro business where they install servers. Who knows? I don't know. 4.2% dividend, 9 forward PE. It sounds attractive. I don't know. Let's see what the revenue growth is. Did I check that? So revenue is, actually this is good. Double digit, 15, 21, 19, 20. So double digit growth there. Maybe as they invest more in their other businesses. Like, yeah, this one too, software solutions. So interesting. Lenovo. Ooh, thoughts? Evan said MCore. Yeah, hey. Sorry if I don't get to these. We'll try and get to these eventually. Okay, so here's MCore right here. This is a great HVAC company. They're in the S&P 500. They're like a cheaper comfort systems. The forward PE is a 23. So they did miss on expectations this quarter. Let me actually go check that. So actually they beat on revenue. They beat on EPS and they beat on EBIT. So never mind. They actually beat on expectations. They beat on every metric this quarter, but the stock um, didn't follow it. Again, fair 23 PE. This is what you're buying. You're buying a company that makes like 300 mil of after-tax net income a quarter. This is really good. And what are they doing with this 300 mil of after-tax net income a quarter? Well, they pay a dividend. It literally only cost $11 million. They can afford to 5x their dividend if they wanted to. They just choose not to. Instead, they choose to buy companies and do massive share buybacks. Look at that. They're doing 200 mil of buybacks a quarter, and they're buying companies. They spent 800 mil buying a company back here. So I really like the future of this one, and they're at a cheap valuation. That's why I think the stock will probably continue to go higher. They've already done massively good. Actually, MCore, a long time ago, and these like 2010 or something, when Comfort Systems was almost about to go bankrupt, Comfort Systems sold like 19 of their businesses to MCore to save the company. Oh yeah, Comfort Systems is another great one. The forward PE on this one's a 32. Current PE is a 40. 32 forward PE just means it's probably just going to go higher, which is cool. PayPal too. Via Owen Chill. Yeah, this is just the S&P 500. This is really what I recommend the most. You should have the backbone of your portfolio in the S&P. A lot of individual retail investors and hedge funds cannot outperform the S&P 500 in the long run, and they're 8 to 10% CAGR. So if you got to own this as the backbone of your portfolio. Then I'd play around with some individual stock names and try out your own strategy. But to consistently outperform the S&P 500 is hard to do. So why not own at least some of it, right? Or own a lot of the S&P 500 names, like all these stocks are in the S&P 500 that I own: Google, McDonald's, United Rentals, Meta, Constellation Energy, Amazon. Comfort Systems is now in the S&P 500, just got added in. So Ferrari, well, actually, that's not in the S&P because they're European. But all right, let's see here. Actually, which company would you choose between Amazon or Google for long-term portfolio? Yo, Silent MC, great question there. The truth is that's so hard to pick because they're both so good. And I own both of them. I don't know. Like the truth is, the answer is both. Because they should almost like perform like just as good. So I don't know. Amazon. I guess at current valuations, I guess Amazon, but they're both at the same forward PE. Look at this. Google's at a 29 forward PE. This is why we're not in a bubble. Valuations aren't expensive. Google's at a 29 forward PE. Amazon's also at a 29 forward PE. Nvidia's at a 27. Meta's at a 24. I mean, that's why I think the S&P is probably going to continue to climb higher in 2026. But check, especially with how they're beating on expectations. But yeah, Google, Amazon, these are like ETFs in one. It's like you're buying a whole like group of companies in one. Like Google owns Android in the Google Play Store, and they own YouTube, which is just huge. And the advertising their advertising revenue is huge from Google and Google search. And they're also an AI play with Gemini. Gemini now has 600 million monthly active users. Literally just created that, and it's now outperforming and beating ChatGPT. So it's basically OpenAI in one. It's crazy. Google launches Gemini 3 Flash. Gemini in Palo Alto cybersecurity do a $10 billion AI cybersecurity deal for their Google Cloud. Yeah, the Google Cloud, I forgot to mention that. They own Waymo. They're in quantum chips. TPUs are huge. Meta's considering ordering billions of TPUs, which could just add so much more growth than them. Yeah, the Google Cloud revenue just hits a new record every year, every quarter. They're a top 10 cybersecurity play with the Wiz acquisition they did for $30 billion. And they do the Palo Alto network partnership. I mean, Google's in monster stock. Again, 29 forward PE, that's fair for Google. I mean, it's you don't really buy it today at their current price, but it's one you eventually want to own. You don't really want to bet against them. I do own them. I'm up 91%. Like it literally came out of nowhere. Like we literally bought our shares all this year. Like it's at 140, got to 147. Our average cost is 162. We literally loaded the boat because this was originally the company that said, OMG, ChatGPT is going to take all their search business and take all their search queries, and now they created Gemini and included the AI search results in Google, and now they're beating OpenAI at their own game, and now they're the main winner, and now they're just OpenAI in one. better position than OpenAI. They have their own cloud infrastructure. And Google trained, literally, you won't believe this, their Gemini 3.0, which is better than ChatGPT, they trained it solely on their own TPUs, their own in-house TPUs. And now Meta's like, hey, we want to buy that, and they did for way less money. Yeah, Alphabet announced a $5 billion acquisition to acquire Intersect. I'm actually surprised about that. Maybe regulators will allow them to buy that kind of company, but Drago said Palantir. Yeah, this one's another cool one. Palantir is kind of a government play as well. Actually, most of the revenue comes from the government. A lot of police stations, a lot of people don't like them because ICE uses them, the military, the Air Force, all use them. So if we go to the government revenue right here, this is really impressive, the growth here. It's up 55%, after grew 33, after grew 15, massive growth from the government side of revenue. And actually the biggest growth driver has been the commercial side of the business with other S&P 500 companies like Google. This is insane. The revenue's up 73%. After grew 26, after grew 22. Like the commercial revenue, like this quarter specifically, a 72% was just great. They beat on every expectation every quarter. And just even more cherry on top, takes a lot of risk off the table, is this balance sheet. No debt at all, completely debt-free, fortress balance sheet with $6.5 billion of cash. This is the growth stock you want a diamond hand and never sell. Sad part is they're so quality that investors realize this and bid this stock up to a super unrealistic valuation, sadly. A 250 forward PE. I mean, I can't pay that. And they already print money, and it's supposed to grow 4x like from here, their bottom line. But it's tough to buy that valuation, and I can't pay it personally. But that's the kind of stock I do want to own eventually. Yeah, Dragos. Yeah, that's a nice one. Also, space sector for Google. Yeah, y'all aren't going to believe this. Google just owns 7.5% of SpaceX. So, and that's worth over $100 billion for Google's market cap. And SpaceX is about to IPO at like a 1.6 trillion valuation. So let's look at Uber. It says it's a trap. Said, can you check Uber? I swinged it. I would not. If you're good at swinging it, I would also own some shares at Diamond. I would diamond hand this name. This is a great stock, in my opinion, to buy and never sell. Looks like there's a little bearish flag or whatever. Sorry, let me get my water here. So Uber Technologies, this is a great stock, a great software name to buy and never sell. The forward PE is a 24. They're trading at 24 times next year's net income for Uber. I think that's very fair. Every time you go book a little Uber Eats order or a ride share, they just keep 100% margin fee on that, a little fee on that. So Uber said on Monday it will begin pilot program in London with Baidu's robotaxi unit. So this is the kind of thing right now the valuation is cheap on this one because they're saying like, oh, Waymo and all these other ride-sharing apps are going to, the robotaxis are going to eat their lunch, but it's actually Uber who has the platform that all the users are on. Like they have, right here, let's see, active users, monthly active consumers, an even better metric, 189 million monthly active consumers on the app. The company that goes to Uber to put their robotaxi service on Uber is the one that's going to win because they have all the users. And if we go to their bottom line, well, actually, this was a one-time adjustment. That's why we don't look at their current valuation. If you kind of look on their current, actually, why is it like the PE ratio? If you look at the top left, current PE, it says a 10. That's not true. You really look at the forward PE because they had a little one-time adjustment to their numbers. So if we go to their net income, it says they made $6 billion. They didn't actually, but they did make $1 billion record Q3 profitability this quarter. They're making over $1 billion net income a quarter, deleveraging the balance sheet like crazy. Liabilities were 64%. Now it's only 53%. The cash flow is actually even insaner. They're doing over $2 billion of free cash flow a quarter. That's how they're taking stakes into all these other companies like Grab. So Uber at a 24 forward PE is a yes in my opinion. Like another great asset they own. They're the largest shareholder of this company right here, ticker symbol Grab. We go down here to shareholders. Uber owns 13% of the entire company. So basically 13% of all this company's revenue goes to Uber. But look at this. This is international Uber. This was so genius because this is how Uber is going to get international exposure. This does exactly what Uber does, the same ride-sharing kind of thing, but in all these other countries, Malaysia, Indonesia, Singapore, Philippines, Thailand, like all these other countries. So pretty interesting there. So hopefully that was somewhat helpful. I do think that's a good one. 2026 will be the year for Bank of America, or for back, or if you want me to look at Bank of America, their accounting piece, that one's been a monster Good one. Hey, Logan says Powell and Broadcom on the list that I went to get up. Broadcom, the sell off was needed. Hey, very nice. Um, would you buy SpaceX when it IPO? No, I would not. I don't love the space industry. Hey, Mind said Tempest. Yo, let's do Tempest AI. Actually, I haven't looked at that one in a long time. I believe Nancy Pelosi and her husband both own this stock, and I can see why. I think this is like a gene therapy splitting company, something like that. But they have real revenue. I forget what it's exactly called, but I guess we're about to go find out the name here. Um, Okay, Wi-Fi, please, because I want to pull up what this was right here. What's it called? Okay, yeah, genomics. Yeah, so some with genes, medical company, but this has been monster growthy. In 2019 is when they started. The revenue was 28 million. It was nothing for the full year. Now for the full year 2024, it was 450 million in every quarter. Look at these triple digit growth rates. They 117% growth, 115% growth. So they're seeing massive top line growth. And not just on that business, but their data and services as well. Check out the annual growth here. It's at a record. How is it this quarter? Up 26% to 81 million. It's never been over 81 million before. So it was a record for data and services this quarter. Where does the revenue come from? 100% or most of it comes from the US. So yeah, this top line growth, this is why I'd look into this one. Do they have a forward PE? So no, they're not actually expected to make any net income anytime soon. So there's no forward PE. So honestly, I still like this one because of the top line growth. But what we really, 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 really want to see is them start narrowing these losses because they are losing a lot of money. And we don't want to see that. It looks like they did an acquisition too. Yeah, okay. So they spent like 375 mil buying a company. That's interesting. That might that's probably what added more to this insane growth right here. But I love the top line growth, and as long as they keep that up, I like that. Healthcare technology company engages in bringing artificial intelligence and machine learning. They focus in on neuropsychiatry. I'm not going to try. Okay. Tempest AI, interesting little AI, maybe medical company. Okay. What stock would you load up right now? That's a good question. I'm not seeing any phenomenal deals. I'm trying to think of what I bought. Oh, Southern Company. Actually, I like this one. This one's a bit of a higher yielding name if you're looking for a utility, just a safe company this stock will not outperform the S&P 500. But what you do get is a 3.5% dividend yield, 20 forward PE, and around 2 to 3% stock price appreciation every year. So on average, you probably will get 6 to 7% of your money back a year. So I like that one at current valuations. I'd love to get some of these growthier names, like great names, I love all these stocks here. I'd love to buy more of all of these, but at a lower valuation. Been buying some more Amphenol stock. I don't mind buying, I don't mind dollar cost averaging up on some of these names. Like I think Cavco hit an all-time high today. Let me actually go do a quick little update. I haven't looked at the market, and dang, we've been streaming for almost 2 hours now. I didn't even realize. So let's see right here. Our portfolio's up 0.5% on the day. Our Roth IRA is up 0.64%. Oh, so hopefully y'all can't hear that. Someone's like hammering something. But anyway, here's our Roth IRA on the day. Alphabet, Alphabet's it's a mod. Hey, we should just win over Alphabet. These are all, I love all these names. Here's my total percent change on every stock in here. Oh my goodness, we're finally green on every stock in here. Carlisle just went green. No way. That's crazy. So yeah. Do you trade options? I actually do not trade options, or I haven't done a single option in well over a year. I don't do that. What I do is, in just having a boring strategy is like holding 7 stocks buying and holding and not selling great quality stocks for the long run can give you better returns than like the crypto traders. And I don't know. And it's a safer approach. I feel like just diamond handing great names. So yeah, we're up 81% year to date in this portfolio. The other ones haven't done as well, but yeah. The reason we're doing so good in this account is because we let our winners win. Some of my biggest regrets aren't buying losers and selling out of them, or it's selling out of good quality companies. So that's why in this portfolio specifically, I call it my buy and never sell account, because once we buy a stock in here, I'm never going to sell it. Also, Robinhood right here, like this is a great example. We used to own like 55 shares more, but we sold it at $36. It made sense because we sold it for a 3x gain. We were buying this at $9, $10. We sold it at 36. We 3x'd our money, but now today it's 120. So that I would have made way, way, way more money if I didn't sell that. And same with like SoFi, and same with a lot of these other names. I wish I never sold. Hey, what up, Adrian? Good to see you, man. You think quantum computing will have a solid 2026? I don't know. That is, I wish I was an expert in that space. Um, I'd wait 8 to 12 months. Rocket Lab are currently space winners. Yeah, Rocket Lab's been a great performer. Wow, that's an all-time high today. Look at that. Up 10% on the day. Congratulations. So Rocket Lab secures an $800 million defense contract and sets annual launch record. So the company completed its 21st Electron rocket launch. Plans for 2026 include multi-launch constellation deployments. So yeah, they got a huge contract with the U.S. military or whatever, U.S. Space Force. Um, Rocket Lab completes first dedicated launch for Japan Aerospace. So they're in Japan, Rocket Labs. So anyway, there's a lot of good news, good sentiment in this company. They're pretty overvalued, though. I would not buy this company at their current price. But here's why they're doing so well. Like their fundamentals are also good. If we go to their space systems revenue, this is great growth. It's up 36%. After grew 81, after grew 15. So it's for the first time ever, this was over 100 million in revenue. It's never been over 100 mil before. And then also not just that business, but also their launch services. That's up 95% year over year. They also have like a $500 million backlog, I think. Let me actually go. They actually used to, or they broke it down in here. Yeah, number 2 right here. Launch services grew 95%, supported by 4 Electron launches and 17 new contracts, and their backlog is at 509 mil. And plus, with this maybe new big contract with the Space Force, maybe it'll be even higher than that. Yeah, it certainly is. So, yeah, not one I'd buy here, but congrats if you own this one. Yeah, no forward PE. Yeah, the worst part about this stock and what's tough is the bottom line. They're losing lots of money, around 60 mil a quarter, but they just did the Geost acquisition. They bought Geost for 200 mil. That was good. Anyway, Rocket Lab, wouldn't buy it here, but that's the qualityest name. I need to stop selling for a profit. Only turns to make it more. Yeah, especially for super quality names. Like if you like, I know some like friends like they completely sold out of Google. Like we were all buying it at 150 and it completely sold out of it for a great gain. Like even though you make like a lot of money on it, and you're like, oh, I'll sell it for a profit. I'll try and get back in. You usually can't get back in for these super high quality names, and these are the names you really want a diamond hand for the long run. So yeah, that's why I'm so glad I've never sold a single share of Google. Or these are names like even though I'm up 91% on Google, I'm not going to trim a single share. And some of these like Comfort System, I'm up, and even Powell Industries, I'm up 332% on this one. I haven't sold a single share of this one because actually I only put $800 into this name and I made it a super small position, but it grew into a meaningful size position, and those are the ones you don't want to sell. So yeah, you start your positions out as super small positions like a Clear Secure or something, and you let them grow into meaningful size positions because of just how risky they are. And if it turns out bad and something goes wrong, then it was a super small amount of money anyway. And then you keep the backbone of your portfolio in the high quality names, like the S&P 500. Okay. We'll look at a few more stocks here. Bull stock. Hey, yeah, Bull. I actually, I did buy them in my Robinhood account. So Webull right here, I got 50 shares of them. They're just got added into like the Russell 2000 index. We're down 1.2% on them. This is another one of the stocks you don't want as a big size position. You keep Webull as a really small size position and just let them grow into a big size position, and it might not do that. But yeah, I like Webull. This is the Webull app right here, publicly traded. Ticker symbol Bull is this brokerage right here. We're up 18.6% all time in our Webull account, but I like them. I think they're going to be more growthy than the analysts expect because they added in the prediction market, the crypto, the advisory, and all this other stuff that's going to make them a lot more than just buying. Whenever you go buy and sell a stock in a brokerage, they make like 1/20th of a penny, but whenever you go like 0.1% of the transaction, but whenever you go do this prediction market stuff, they get a 2% fee on that. So it's 20x more valuable. This prediction market stuff to the brokerage and more profitable. Love cover calls or CCs. Hey, nice, Dragos. Let's see here. AU stock. What is AU? And then we'll call it a wrap here. So this is Anglo Gold. So yeah, there's the price of gold under it. This one has massively outperformed gold. Well, just gold has done so well. And this is like a gold or a company that owns a bunch of gold mines, I'm guessing, or revenue from product sales or is a holding company, engages in the operation and exploration of gold mining projects through its subsidiaries. So they're headquartered in Great United Kingdom. Let's see. Yeah, where's the revenue come from? So Africa is 65% of the revenue. Australia is 24, and then America is 23. So yeah, if we go to their bottom line right here, this is insane. Look at this. They made 815 million of after-tax net income this quarter. So yeah, look at that. Sales are up 62. Net income's up 258. Fortress balance sheet. So yeah, their net margin is a 33, up from a 15% net margin. That's what the high gold prices do. 1 billion. And you know what? Gold prices are at an all-time high today. So I bet they're even going to do any better. Down 23% on Calm. Hey, Danny, make sure you include the dividends reinvested because Calm Maine is a massive dividend payer. But yeah, this is another stock you don't want as a big size position because they're commodity related, but this is one that I do think is worth owning. This company is a cheap stock, 8 forward PE. This is a 10% dividend yield. They did $26 of EPS this year, or the trailing 12 months, and they paid out $8.70. So that's a very safe payout ratio for a 10% dividend yield because the PE ratio is so low. Basically, you get paid instantly the second you buy this stock. They have over a 10% earnings yield, 10% free cash flow yield, and this is just crazy. Check this out. The market cap in the top right, they're worth $4.06 billion. So the whole company's worth $4 billion. They literally have $1.25 billion of cash on hand. So literally you can subtract 25% of the PE ratio away because 25% of the market cap is just literally the cash on hand. So you're left with a $2.75 billion company. And you're buying a business that's making a couple $100 million net income a quarter. Obviously, the price of eggs has been kind of super high, but they really benefit from those high egg prices, like those whenever there's the bird flu stuff and the burning of chicken farms or whatever, all those conspiracies, like this company is the most to benefit. So that's why I like them. And you get kind of a surprise dividend every quarter. You know, they did a $3.50 dividend, $2.25. Like, remember, the stock price is $83. So if they paid out $1 in a dividend, that's already well over a 1% instant return just from a dividend. You know, so like when they did a $2.35 dividend, you know, that's an instant basically 3% return just in a qualified dividend that you get in your brokerage. And like an instant, you know, $3.50 at $83, like that's insane. So yeah, and they can afford the dividend too. It's a low PE, it's a commodity stock, but I do like them. So yeah, that's one. Yeah, even though if you're down, that's one, you know, you just kind of hold that one. But yeah, good to see you, Danny. Well, actually, we can look at one or two more here because I saw someone wanted me to get to this one. So, and MicroStrategy. Here's the thing with MicroStrategy. This is kind of like a Bitcoin proxy. You know, usually whenever Bitcoin goes up 1%, they go up a little more than Bitcoin. But here's the whole scheme of this company. If we go to MicroStrategy's cash from financing activities, every quarter they're getting cash from issuing shares. And like every quarter, like this quarter specifically, a year ago in 2024 Q4, they literally diluted the shareholder by $19 billion, or like 30% of the whole market cap at the time. So every shareholder got diluted, but they rose $18 billion of cash and put all that cash into Bitcoin at like, I don't know, like 75 price or whatever at the time. And then that Bitcoin appreciated to 100K. So that's how their balance sheet literally went from 8 billion of assets to 73 billion this quarter from diluting the life out of you. But it's worked. It's worked for them. I think their average price per Bitcoin right now, average price like 78K. I don't know something around there, but yeah, basically it's a Bitcoin holding company. I'd maybe rather just own actual Bitcoin, but it's just a company that accumulates a bunch of Bitcoin from issuing shares. Kind of interesting because I think they just acquired some more Bitcoin today. What about energy/uranium play? Oh yeah, hey, so the uranium ETF is ticker symbol URA. If you don't know which individual uranium stock to pick, you know, the ETF is good. My favorite pick of all time would be Cameco. CCJ, I think is the ticker symbol. And then another great one is LEU, Centrus Energy. LEU stock, but I'm actually a bigger fan of not the because right now uranium has been in such demand. If we look at the uranium ETF just kind of as a whole, uranium has been in such demand because the U.S. is no longer buying Russian uranium and China uranium. We're trying to source it now from Canada and the U.S. So that's why all the Canadian and U.S. uranium names have been popping this past year. So basically, it's from nuclear reactors. We're trying to speed up. There's a lot of stimulation from the government around nuclear reactors, and nuclear reactors are powered by uranium. And CEG is the number one. If you want honestly, I like CEG the most. This is the company that owns the nuclear reactors. You know, they own over 30% of all the U.S.'s nuclear reactors, and you know, this is basically that answers your energy play. Yeah, the PJ. This is an unregulated utility, and their auction set record prices. So yeah, they heck up price targets on this one. DOJ approves Calpine acquisition. This acquisition that they're doing is instantly, if you kind of look at the bottom here, expected to add 2 billion in annual free cash flow. And it adds over $2 of accretive EPS for them. And they just got new license renewals for 2 more nuclear plants. This renewal preserves over 2,200 jobs, generates 8.1 billion in tax revenues. That's how they're marketing it. So, but they make heck of money off this. So, ensuring their operations of these nuclear reactors will work through 2047. There's no other close second. They're cool. All right. Yeah, CEG's the best. So anyway, I hope you guys have a great holiday. Hey, Dad, dude, good to see you, man. I'm gonna go here. Okay, we'll look at APLDR. Well, APLD, then I'll end the stream here. And I'll do a quick stock portfolio update too. And by the way, before you go, make sure to hit the like on the stream. We do stream every day. Please watch out for people impersonating me. I literally sell nothing. I have no course book. I don't coach. Only thing I do have, though, if you wanted to support me, is a YouTube channel. If you missed anything, you can rewind the stream. But here's another stock I love. This is APLD. Actually, I don't love this one. I thought this was a different company. Sorry. That's your data center hosting company. You know who owns APLD? Is NVIDIA. We go to NVIDIA right here. Their largest holding is CoreWeave, and their second largest holding is APLD. NVIDIA is giving money specifically to the companies that spend all their money on NVIDIA chips because there's nothing proprietary here. That's why I don't love these data center companies, because they literally, all APLD is what is this company? Is literally a company that owns a bunch of NVIDIA Blackwell chips. And then these chips are in such demand from cloud hosting right now. So if we go, what does this company do? Data center hosting, cloud server hosting, high performance hosting business. So basically they're renting out their GPU capacity to other companies that need it. And NVIDIA gave them a bunch of money. Basically, NVIDIA took a stake into them, gave them a bunch of money just for APLD to go spend all that money back on NVIDIA chips. So honestly, I'd rather own NVIDIA than these data center stocks. CoreWeave, Nebius. The end net margin game, I think, is going to be very low, and they're it's tough. There's this, actually, this might be bullish. Jim Cramer specifically is shorting these data center stocks like Nebius right here for the whole depreciation thesis. They're buying these super expensive NVIDIA chips, 55% CUDA tax, and in 15 years from now, these chips are literally going to be worth zero. So there's this depreciation curve thing, but Nebius is, I don't know, interesting there. So let's see here. What up, Maddie? What platform are you using? Yeah, hey, if you want to get this platform I'm on, by the way, this is a brokerage right here. It's in the link tree in my bio, very first link there. It's a broker called Moomoo. It's an affiliate link, full disclosure. So if you want to use my affiliate link, if you deposit $100, we'll both get some free stocks. But yeah, you can just type it into Google, broker called Moomoo, or the first link in the link tree in my bio. Yeah, it's my favorite brokerage. Free, cost nothing. Good to analyze stocks. And you know what? Let's look at Visa too. You have a lot of bots in the stream. Every time you stream, I get random people following me. Yeah, so please watch out for people impersonating me. Just know I'll never follow you, DM you. I don't sell anything or nothing like that. And speaking of kind of the super investor watch list, you know who owns Visa? Is Nancy Pelosi. If you look at the top here, Nancy Pelosi. I want to pull this up actually. Visa, she does own some. And this company is a great stock to never sell. A 27 or 28 forward PE is very fair for a quality behemoth like Visa. Those small little micro credit card transaction fees that are slowly bankrupting us are making Visa a lot of money. If we go to net income, they're easily making an after-tax net income, $5 billion net income a quarter. So they're easily doing $5 billion net income a quarter. And what is Visa doing with this $5 billion net income a quarter? Well, they pay a dividend, and that dividend only cost $1.15 billion at the top here. And since the dividend costs so little, they have so much money to do share buybacks, and this is really what's boosting the stock performance. They literally spend $4 to $5 billion a quarter solely buying back their own stock on top of the dividend. And here's what that does for you. So the net income declined 4.3% year over year. But since they did share buybacks, their net income per share, their EPS, only fell by 1%. So that's where the share buybacks really help them out. That makes the PE ratio go down, makes basically the company cheaper, gives you more ownership in the company, makes the cost of the dividend go down. So anyway, it just makes the stock go up whenever they do those buybacks. Shareholder-friendly company there on Visa. I got money in Nebius too. Yeah, hey, Nicola. Yeah, if you want to get this app, or this is a brokerage, it's in the link tree in my bio, that very first link there. Broker called Moomoo, my favorite one. And hey, Shark and Water, happy holidays. Yeah, he said FOXA. How does it look to you? What is FOXA? Let me check that one out right here. Can't go to work with Visa, but more of a MA guy. Oh, hey, yeah, Mastercard and Visa have like a shared duopoly. So, so here's Fox Corp. Yeah, there's kind of another media business. There's a whole bidding of Warner Bros. Discovery, and maybe Fox is kind of, I don't know, going up with all that news. But yeah, they're this is their cable network. This is kind of the slow grower. But they're the cable network programming, and they're in television. So yeah, uh, that's actually looks like it hit a record revenue. So here's their wow. They make great net income though. They're easily making like 700 million of after-tax net income a quarter, like 500 mil of after-tax net income a quarter. They really do make good bottom line. Plus, they pay a dividend, a 0.74% dividend yield, very safe payout ratio. So, what's the multiple on this company? Even though the stock is at an all-time high and has had this massive stock price appreciation, the forward PE is a 16. So, a 16 times net income. I mean, that might even mean the stock could go a little higher. I mean, I don't know if that stock really deserves a 20 in the 20s multiple, but just from the cable business. But does this platform has high income dividend ETFs? Yeah, you can buy ETFs on here. Yeah, there's a lot of cool stuff actually. You can go and see what you can explore here. Actually, I wanted to do a stream one time where we just go look at all these different industries, look for a bunch of stocks that we can add to our watch list. If you're looking for new names, like they have a bunch of like drones right here. We were looking at Red Cat and AIRO. I really like Red Cat. And, there's a lot of industries like copper. Amphenol is a great play there. So yeah, there's just a bunch of cool industries that you can explore new stocks. And also there's a lot of cool data you get. Oh yeah. And you can see the institutional tracker. This is all free data, cause it's all public anyway, but they just kind of make it cool. You can see what like Berkshire Hathaway's doing and ARK and see like what's their newest position. Yeah. Berkshire Hathaway, this is why Google just went up. Berkshire Hathaway, which is Warren Buffett's company, just bought Google for the first time ever. Pretty crazy. So, and you get this cool data right here because we can see the interest cut rate probability. So on January 28th, there's another Fed meeting. And on January 28th, which really isn't that far away, basically a month away, almost exactly, there's an 80% chance of no interest rate cuts, 20% chance of a 25 basis point cut. But then the next meeting, 50% chance of a 25 basis point cut just off the Fed dot plot meeting. And you just get like a bunch of cool data if you ever want to see them. Anyway, yeah, if you want to get this app I'm on or brokerage, link tree in my bio, first link there, free brokerage. But all right, well, hey, we're having fun here. Let's. I guess we can look at a few more here. Lamb Research, I actually really like Lamb Research. What up, Chance? So this is another great semi play. All-time high today as well. Whoa. Congrats if you own this name because you got to be up on your position. So all-time high. Forward PE is at 35. So of course, since they're at an all-time high, of course, the valuation is going to be expensive. But let's check out their numbers. The revenue grew 27%. That's great. 27% revenue growth, and the net income grew by 40%. So when the revenue is up 27 and the net income's up even more when it's up 40, that means they're expanding margins. Net margin went from 26 to 29, so a 10% growth in net margin, that just adds money to your bottom line. And they pay a dividend. You get a 0.5% dividend yield on Lamb Research, safe 22% payout ratio. It just goes up every year. So yeah, congrats if you own that one. I don't know if I'd buy it today, but that's a cool one. Oh yeah, Adobe and PayPal. PayPal, it's a tough one to buy, but Adobe. Actually, I do like this one too. The fundamentals of MA is much stronger, even though Visa is dominating the international market. Yeah, actually, those two stocks nearly move identical. If you pull up Mastercard or Visa, the stocks almost move identically for the long run. So. Because they just basically have a same share market share. So whichever one you pick, you should get almost identical performance. They're both great. So here's Adobe right here. Adobe is a cheap one, a 20 forward PE. They're getting hurt by this AI thesis. You can create great art, great logos in ChatGPT. So why would you need Photoshop? But I'm a believer that you always are going to need that final touch on art. I use Photoshop still on the daily, and their business is still growing like crazy. It's just the future expectations, the future sentiment that's really hurting on their stock price and their multiple. But the numbers haven't done that yet. The numbers are still phenomenal. They beat on revenue, they beat on EPS, they beat on EBITDA. They're printing, they made $1.86 billion of after-tax net income this quarter. That's after they paid, the before-tax number was 2.26. So they're printing money, 1.8 bill in net income. What are they doing with all this net income since they don't pay a dividend? Well, they're just putting it all in share buybacks because they know the stock is undervalued. So they've bought back like 7% of the entire company just this year. It's crazy. All right. Um, hey, what up, Nicola? Nice P&L there. Hey, thanks. Well, don't be fooled. That's just one of my portfolios. All of our other accounts have lowered that average. How are we doing on the day here? We still got 2 hours till the market closes, but yeah, we're up 0.55% on the day. Year to date, we're up 17% in this account, and then in this account, we're up. Actually, this one's been crazy. We're up 81% year to date in this account. What about this account? Well, I don't know how to change it to year to date, but yeah, this one all time in this one, we're up 18.5%. We've definitely underperformed all time in here. PTRN starting to look under. I've actually never heard of Pattern. And then he also said, just curious what app you're using that shows it. Oh, hey, this app right here is my favorite one. This is my favorite brokerage, one we've been using this whole time. This one I'd recommend. It's in the link tree in my bio, the very first link there, broker called Moomoo. Or if you want to use my affiliate link, Pattern Group, they're actually on my watch list. So I don't remember this stock, but there must have been something I liked a long time ago. They're a $2 billion company and the forward PE is a 27. So they currently don't have a PE and the forward PE is a 27. So that means they're expected to just create a bunch of net income. Also, I almost promise this was their IPO expense. Like so this was like a fault. They didn't actually lose net income this quarter. So, yeah, good balance sheet. They're historically making net income every quarter. Revenue growth is really good, 45, 38, 31. What industry is this company in? Pattern Group, marketplace, proprietary technology, AI. It acquires inventory from brand partners and sell to consumers through online marketplaces. Maybe you can check out their website right here. How strong is your marketplace platform? One platform, all the e-commerce things. So kind of like an e-commerce solutions, maybe software name. And, a lot of software names are getting hurt by AI, but the 28 forward PE certainly seems attractive there. So if we look at XYZ, so XYZ stock and then PayPal, this is like PayPal's biggest competitor, Cash App. If anyone's heard of Cash App before, this stock, Cash App, is the same price that it was in 2018. Ticker symbol XYZ is the company that owns Cash App and 62% of the revenue. And so literally Cash App stock is the same price that it was in 2018. Well, that's the same for PayPal. It's like this whole industry it's not just PayPal that looks terrible. Like, look, PayPal, it is terrible. PayPal's the same price that it was in 2017. So it's done nothing for 8 years. So they're basically trading at this valuation, this 12 PE, where they're not really expected to create or lose you any value. Here's what I do like about PayPal. Since the stock is so cheap, they're doing insane share buybacks, and they now are paying a dividend to kind of get more buyers. But yeah, check this out. They're easily doing 1 to 1.25 bill of net income a quarter. And of course, already spoiled it, but what are they doing with all that? Share buybacks, 1.5 bill a quarter on share buybacks. So they've bought back, like, net income's up 23.5, but the net income per share is up by 31 because the share part of the ratio went down. It makes the EPS go up way more than the net income. So I do like that. I think PayPal's also getting into like a prediction market, or I don't remember. PayPal applies for Utah chartered PayPal bank. Oh, that'd be interesting. They're kind of doing what SoFi is doing. So, all right. All right. I feel bad. Front Street says him's been holding for a while. It never been in the green. Only goes down. Yeah, it's super sad because a lot of the margins will never be the same on this company. And sadly, they might be expensive even after their huge kind of decline here. So yeah, if we go to their forward PE, I want to pull that up here. The current PE is a 66 and the forward PE is a 64. So their net income is supposed to grow like 2% next year. So it's unfortunate because one of the reasons why their net income was so good back here was because when Ozempic GLP-1 prescriptions were in shortage, they were allowed to sell it and to create and have massive profit margins on selling these weight loss prescriptions. But now they don't sell Ozempic anymore. They sell some other weight loss prescription, and it had to massively cut prices on it, and that's what led to all their net income. But they're kind of diversifying away. The top line growth looks great. Revenue's up 50 after grew 77 after grew 80. So the top line looks great, but it's a margin issue. Revenue's up 49, but profits are down by 47, and it really is down by 47 or down by 79. Gross margins are down by 7 after they fell 5. Net margins are down. So, and they're missing on expectations or the net income and even earnings before interest and taxes that missed by 50 or almost 50%. So, but there is some good news because they're diversifying away to like their online presence. I actually want to pull that up right here. Because they have a lot of subscribers. Yeah. So their revenue increased 49%, fueled by a 50% rise in online revenue. So they're growing their online presence and a 21% subscriber growth to 2.47 million. So they have a lot of premium subscribers, but adjusted EBITDA grew 53%, but it exceeding internal efficiency target despite this is about margin pressures from price reductions and GLP-1 treatments. And they're kind of saying that down here as well. They also completed an acquisition for $258 million and expanded into European markets and launched new hormonal health products like their testosterone stuff, but while reducing GLP-1 treatment prices by up to 20%, impacting near-term profitability. The margins will sadly just not be the same as they were. So that's the only thing that scares me. And it's like 64 forward PE. That's not like a cheap valuation either. I love the top line growth and the price to sales looks good, but yeah, the EPS expectations are not good. That's the only thing that sucks. So yeah. Oh yeah, PayPal banking, and they have their own stablecoin. Yeah, let's do SoFi real quickly. This is probably one of the last one we do. Then we've been streaming for over 2 hours now. Hey, if you guys wanted the follow button, we stream every day. SoFi is one I do own. This is one of the stocks I regret every freaking share I've ever sold of. I got 24 shares left, and we're up like what were we up? 350% on SoFi. It's not one that I'd buy here. It's expensive. A 47 forward PE. This is kind of the company that's out innovating PayPal. This is why SoFi, though, deserves a high multiple. If another company could have this sort of growth, they also deserve that high multiple. But look at this. Their financial services right here. They have their own banking charter. They got it through a loophole that's now patched because of them. Their financial services are 420 mil, up 76%. After grew 101, after grew 140, after grew 280, after grew 6. Like it literally in 2020, this was a nothing revenue. It was 2 million a quarter, 6 mil, 17 mil. Now just this quarter, it's 420 million. And at this growth rate, what's it going to be the same time next year? No analysts expected that. And here are the analyst expectations. It's the orange line. They beat on revenue. They beat on EPS. They beat on EBITDA. Like they're beating on every metric. So that's why I think people are really starting to take SoFi serious. They're making 100 mil plus in net income a quarter. They're growing like crazy, nearly $1 billion in revenue a quarter now. So SoFi is a beast, but it's expensive at a 47 forward PE. It's one you probably want to get exposure to, but not at their current price. But they do have massive growth behind them, which I do like. So anyway, I hope you guys have a great rest of your day. How we already went over Uber. Uber's one I think is a great stock, Eric. Great stock to own. I'm up 0.5%, now down 1% since stream started. Seem to look at a step back. I want to know where you got the extra 0.05. I forget what I was talking about there, but yeah. Let me end this with a quick portfolio update. I appreciate everyone that's here. Please watch out for people impersonating me. I'll never follow you, DM you. I sell nothing at all. So our Moomoo portfolio, we're up 0.55% on the day. Our Robinhood portfolio, we're up 0.51% on the day. And our Webull account, which is like our risk on account, we're up 0.28% on the day. A slight little maybe rotation down on the day right now. Yeah, our food stocks are getting hit. Sprouts Farmers, TAP, which is Molson, and Calmaine, the chicken egg stock. Looks like that one even went slightly negative. Our Robinhood portfolio, this is known as our dividend-only account. If you look in the top left, every stock in here pays a dividend. But as you notice, most of these are dividend-paying stocks. Are dividend-paying stocks that are super growthy, so super lowing yielding stocks like Meta, Google. They're not your traditional like just dividend stock, but they do pay dividends. And I think these are the kind of companies you want as like a young investor. You want to buy these names that do pay a dividend, but you don't need the dividends now. But in 5 to 10 years from now, when they triple their dividend, it will be some meaningful income for you. We also have a Roth IRA. Roth IRA is just a tax-free retirement account. So like if you 20 extra money on a stock and then sell it. It's complete tax free, which is cool. But you can't withdraw the money till you're like 55. And another cool thing is if you have a Roth IRA, if you're a first time house buyer, you can completely withdraw all the money from your Roth IRA for a first time down payment on a house, which is so cool. And so, hey, no way, yo, Counting Peas, yo, shout out to the legend on the YouTube stream, Counting Peas, with the $3 super chat. I really appreciate you, man. I hope y'all have a great holiday week. I'll probably be streaming tomorrow. We'll be streaming tomorrow, and I might even do one later tonight if I'm free. So, what currency is that? I don't know what currency that is, but dude, I appreciate that. Yeah, Uber, real quick on Uber, this is a great one. We did like a whole 10-minute analysis on Uber earlier in the stream. By the way, if you want to support me, though, there's no way to support me because I have no course book. But if you do want to, just hit the like button and subscribe to my YouTube channel. Watch the stream on YouTube, and you can like rewind it if you missed anything. But yeah, Uber at a 23 forward PE. That's a fair valuation. And I really think it's Uber. The valuation's cheap right now because they think robotaxis are just going to eat their lunch. But it's really this company that has the platform of, 189 million monthly active consumers on their platform already, where if a robotaxi comes up to them, because it's going to be so commoditized, the robotaxi stuff, the one that's on the Uber platform is going to get the most traction. So yeah, they print over $1 billion of net income a quarter, $2 billion of free cash flow a quarter. Uber's a monster at $80 at a literally 23 forward PE. I think this is where you should start the dollar cost average. Don't full size position it today, but start the dollar cost average. Looks like there's, from a technical point of view, this app is telling me there is a bearish continuation triangle, probability of a 49% chance or something. I don't know, but can you show where is dividend payout on Moomoo? Yeah. If you want to see your dividend history, it's a little complicated to do, but hopefully I don't share anything. You just go to more right here, and then you find fund details. You go to fund details, and you go to filter, and you go to corporate action, then you click dividends. And this is basically the way I like to do it. But I think you can just type in dividends up here and it'll show you. But yeah, here's kind of my dividend history. Again, every stock in this portfolio pays a dividend as well, except for Amazon. But yeah, I get low dividends like Powell Industries, $3 dividend, $2.50. FIX did a $7.20 dividend after they paid last quarter a $6 dividend. They rose their dividend. I didn't buy any more shares. I had the same 12 shares and I got $6, but then the next quarter I got $7.20 because they rose their dividend. So that's kind of where that snowball happens. So yeah, Comfort Systems has been a beast. But yeah, see you all later. Would you? I don't know about no NFTs. See y'all later. Hope you have a great rest of your holiday week. Don't trade this week. There's only like half days and stuff. And usually this week is bullish because there's just no sellers on the order book. And thank you to everyone on the YouTube stream. Make sure if you haven't already, hit the like. But I appreciate y'all. And thanks again, Counting Peas, for the huge donation, and all the members, and Looney, Logan, just everyone in here. Thank y'all the most for everyone on the YouTube stream, because I'm trying to build up my YouTube more than my TikTok, because I get way more viewers on TikTok. But I do appreciate everyone.